to the Fed. Essentially, the money is just sitting, metaphorically, sitting in a vault somewhere. Just
exactly.
Dust.
Okay, come on, Cameron. You know the math of the multiplier effect. Where's the multiplier effect of the next round of stimulus, whether fiscal or Fed? Which is more efficacious?
Well, it's clearly Fed. It's clearly fiscal, right? And
thank you.
So the idea, the good faith explanation is that Mnuchin wants to take the money back to the Treasury and give it to Congress, and then have Congress allocate it as grants rather than loans. The point being that the Fed can only make loans, not grants, which is a point that Powell makes very, very often, and that really what businesses and people need is direct injections of money, not more debt. So that's the good faith explanation. The bad faith explanation is that the administration is essentially trying to steer the ship of state towards an iceberg, so that when the Biden administration takes over, it essentially hits and gets blamed for it. And the idea here is that once the money is recalled, it needs to be specifically appropriated back to the Fed before they can kickstart these programs again. Given the trajectory of the public health data and renewed lockdowns and how things are likely to deteriorate on a real-time basis in the very near future, there is a chance that these programs might face more demand in the future. And if they're then shuttered at the end of the year, then there's going to be some institutional hurdles to kickstarting them rapidly. But I think ultimately, I would probably lean. How you choose to interpret it is in the eye of the beholder, I suppose. But ultimately, I don't think they've been particularly efficacious. So I'm not terribly concerned by the fact that they might be shutting down.
But Cameron, so if this is actually trying to steer a ship, towards an iceberg, how much more damage can be done in the next 7 to 8 weeks?
Well, it's not just about economics, obviously. If you believe some of the stuff you read, foreign policy is being impacted. It doesn't seem. I gather that the coronavirus task force has finally met again, but I think you could argue that there hasn't been especially effective leadership on that front. The fact that we haven't had a transition is extraordinary and unprecedented. And again, I'm far from a cloak and dagger expert, but is seen to raise a few dangers here.
Yeah. Cameron, I've got to leave it there. Cameron Christ, thank you so much for the briefing. Greatly appreciated today. Speaking now in Europe on any number of topics, and I know she led off with the pandemic this morning. Ursula von der Leyen, she's European Commissioner, and Francine, to be direct here, her plate is full.
That the U.S. would join the Paris Agreement.
Yeah, her plate is full because, of course, she's trying to push this green agenda, and this is one of the biggest things that they can do. But really, the concern is over the budget, Tom. And this was kind of a spanner in the works. And, we also spoke to Wolfgang Munchau. So Poland and Hungary have decided to veto the disbursement of really important funds to, certain economies that need it. And people are saying, look, is this a bluff? Do they want something in return? And it looks like this isn't a bluff. So it's a major headache for Europe and its Commission president.
And also the debate over green and usage of that from these bonds. Some of the reading maybe for Americans over the weekend on the European story. We'll continue to watch that as well. We've got much more for you this morning. Just interesting weekends. And of course, this election in America, it is well into November and we're still focused on the election of 2020. This is Bloomberg. Good morning.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
New York City will be back. I'm bullish on New York City. This is a particularly tough time. 2020 and 2021 are going to be tough years. But obviously, with the great news from Pfizer and Moderna and the vaccines and the offing, that will be terrific news. New York City will be back after getting through the dark days of 20 and 21. No question in my mind.
Mr. Foy, the MTA, for all of you worldwide, this is the most emotional interview for those of us in New York. At the beginning of this pandemic, we decided to speak to medical experts. We spoke with Adam Bernheim, a radiologist of Mount Sinai, who long ago and far away actually bought radiological images, snapshots of the lungs of Wuhan. That was our first important interview on this pandemic. Today, David Rich joins as president of Mount Sinai Hospital in Mount Sinai, Queens. David, I look down 101st Street and I count the ambulances. It's not as bad as it was in April. It's not as bad as it was in May, and yet we're hearing about increasing troubles. Give us a snapshot of Mount Sinai this Friday morning.
This Friday morning, and really for the past 30 days, Mount Sinai Hospital has about 50 patients with active COVID infection. That is significantly less. At the peak of the crisis, there were 770, including patients in the tents across the street. So it is a markedly less severe surge than what we saw in the first wave.
Then why are we closing schools? Why are we seeing hospitals in North Dakota, in Utah, in Idaho so challenged? Is it just a new pandemic of geography, or is there something different this time?
Well, this time we see what's coming at us. We have testing in the region. It's certainly not as good as it needs to be in the long term, but we can see the positivity rates. We didn't know back in February and March what was coming towards us. There was no capacity, and then we were overwhelmed. This time we can see the increase coming at us and take proactive public health measures in advance of effective vaccines in order to control the spread, so that we don't see the incredible amount of death and excess death outside of COVID that we saw during March, April, and May.
Dr. Rich, good morning from London. Is it a different type of population that's being affected this time? Is this why, fewer people are ending up in hospital, or is it because of the viral load that we're seeing?
Well, there are certain things that are different about this second wave, just looking at it from our perspective for inpatients. We see that they're slightly younger, implying that we're doing a better job of protecting our elders. We see a slightly decreased length of stay, and we're very happy that the mortality rate came down from 20% in the first wave to 5.1% in the second wave. While still a very deadly disease, this does give some hope that something that we're doing, something in terms of therapeutics or better management of oxygen levels, is improving the outcome of patients, but still not a disease to take lightly at all.
The World Health Organization has ruled using antiviral remdesivir as a treatment, has ruled against using remdesivir as a treatment of COVID-19. What treatments are available right now that you are using?
Well, remdesivir, it does have some data that are contradictory, but in the early phase of inpatient care, remdesivir and in patients not yet showing their own antibody response, convalescent plasma are tools that we're using. And then as the disease progresses and we see more lung involvement, the use of glucocorticoids, commonly known as steroids, such as dexamethasone, and drugs that thin the blood or prevent clotting have been very effective for us in preventing some of the complications that we saw in the first wave.
Dr. Richard, you're 36 years at Mount Sinai in doing the hard work of anesthesiology. You have seen bed to bed what people do. I want you to speak to our audience worldwide about the emotion of the CDC yesterday, basically cancel Thanksgiving, or what we're seeing in London about cancel Christmas. How does a pro like you observe the political maelstrom of this pandemic?
Well, it's very hard for many of us to see that science is not being taken in the proper regard throughout the United States. I can't speak as much to the rest of the world, but it's a problem when we don't have universal acceptance by public health officials and by governments that we must mask, we must socially distance, that the Thanksgiving holiday is in many ways the worst of possible situations for spread of this virus, because having large groups of people indoors sharing a meal is probably the most effective way of spreading. It's therefore something we must avoid.
We speak to the epidemiologists, people like Steve Riley at Imperial College. Let me ask you a question, and I'm sure you're briefed on it if it's not your direct focus. Dr. Rich, on herd immunity, how do you respond to people saying herd immunity will work? What we've heard is this virus is too toxic.
Well, herd immunity is something that will be achieved with vaccines when somewhere between 60 to 70% of the population has achieved high levels of antibodies that are able to neutralize the virus. So we will get there with vaccines, assuming we can overcome any reluctance within our population, which is a big assumption. But we know that if you're going to achieve that from previous epidemics and previous diseases, that is the number. Even in New York City, it is probably only about 15 to 20% of the population that is currently immune, so that is well below the threshold for herd immunity.
But Dr. Rich, how long are they immune for? How difficult is, and looking at these vaccines, looking at these propositions, they work, they have a 94.5, 95% efficacy, but for how long? If it's only 6 or 7 months, will we ever reach herd immunity?
Well, we have vaccines for the flu that we have to take every year. So even if there is a need for additional vaccination in the future, that is a reasonable thing for us to expect of the population, that we would get additional shots at different times. What we've seen in our own research after people recover from the disease is the antibody response is very strong for about 3 months and then gradually starts to decline in an average person. But some people maintain immunity for longer, and we also don't know if they're re-challenged with the virus, if they will have a much quicker immune response, something called the anamnestic response, where the body remembers that it had already seen the virus and from various mechanisms is able to mount a response that either prevents the disease or causes a very mild version of it.
Dr. Rich, one final quick question. How are the doctors and the nurses doing in Queens on Fifth Avenue for Mount Sinai? How are your doctors and how are your nurses holding up?
We have an incredibly heroic team, every hospital in New York, really throughout the United States. We've seen people put their own lives at risk, but do it with professionalism, with grit, and with great determination. They are all our heroes. They remain so. I think it's been very hard for people because there just really has never been a complete respite from this. And as fatigued as the population is with COVID, that fatigue is even stronger in the healthcare profession. So we work very hard to support our staff. We've developed mechanisms to do that, everything from special respite rooms to behavioral health programs. And that's very important for all health systems to do, to support their teams that are doing this vital work.
Thank you so much. Dr. David Rich, there, president of the Mount Sinai Hospital in Mount Sinai, Queens, joining us today. Now, for much more conversation from the Bloomberg New Economy Forum on COVID-19, on the pandemic, be sure to catch our special programs featuring, of course, some of the highlights of this week's discussion. There was a fantastic one on virus catchers. Now, that's this weekend on Bloomberg TV. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keen's in New York. Tom, if you look at the data, we saw a little bit of a shift maybe in the last 10 minutes or so. European stocks are now gaining. U.S. futures are falling by less than they were just 10 minutes ago. Now, I have to say a lot of the focus is on the dispute between the Fed and the U.S. Treasury and concerns that they'll be unable to unleash further stimulus for their battered economy in the U.S., but a similar conversation also here in Europe because of the EU budget and that veto from Hungary and Poland. Tom.
Sterling nudging up a bit, 132.76. I don't think we see 133, but we see an eventful week of stronger sterling. I have noted yen under 104 really has my attention. I'm not calling for stronger yen, but it's giving it to me. 105, 104, 103.82 on yen. Renminbi finally pulls back the yuan 655 back to 657. You can see I'm struggling with the data check because it's a Friday. It's sort of like that fourth week in August Friday feel to it. But you really wonder when the news comes along what this market will do. Let us not forget Dow futures even negative 63, 29,380, and you see in the VIX 22.87. On the American economy, Ellen Zettner next.
Können Sie einmal noch ganz kurz zu uns kommen? Ganz kurz.
Der Vorsteher
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough. So the next couple of quarters is going to be very challenging.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve where people can understand how they can do commerce and do all that sort of stuff. And this uncertainty that's looming over us, I think, is just a continuous drag.
We welcome all of you to Bloomberg Television worldwide and across this nation. This is what we do, important conversations with experts. That was wonderful to see Kaplan, Mester, and Bostic of the central bank. We advance the discussion with Ellen Zentner of Morgan Stanley. Ellen, I got 8 ways to go on stimulus and that, but I really want to get out the Ellen Zentner 2021 57-page thing. It's the only thing James Gorman reads all year is a Zentner look forward of a given year. Ellen, what's the job economy look like in, say, February of 2021?
Well, that's an easy ask because that's the dead of winter. You know, we put out what I would call a very lofty outlook. You know, I've heard back from folks that our baseline looks more like everyone else's bull case. But the contours of that are really important. I mean, we think we've got a very difficult winter here to go through, and we've assumed consecutive declines in consumer spending as we go through this winter of discontent. It's a tough time. And so you throw out an easy month, February, I can tell you it's not going to look good in February.
Okay.
Dead of winter, even though, you know, the efficacy news on the vaccines, you know, great news because even through the dead of winter, it can keep hope alive because there's a light at the end of the tunnel because of that positive vaccine news. But it's not going to help businesses stay open if they've been mandated to close. So we assume that you know, lockdowns are more pervasive across the country, that we've got a difficult time to get through first. But next year, you know, the timeline of the vaccine, in our view, is not changed. Right. Rolling that out and having the service side of the economy coming back more strongly.
Ellen, I want to dovetail 2 thoughts here. One is your idea of where we are in the dead of winter, this winter of our discontent, and also Stephen Englander of Standard Charter, who says things are so grim the Fed may act before that February, the December 16th meeting as well. What is the urgency for the Fed given your winter of discontent?
So the Fed is, you know, they're in a tough spot right now because financial conditions are very easy. I mean, the markets certainly haven't seen the kind of data that they typically would need to see in order to fall apart in a way that would get the Fed to respond. You know, and so on the one hand, because financial conditions haven't tightened, and they've said they've done enough. Stimulating the economy for now, and unless financial conditions tighten, they're not going to act to offset that. But on the other hand, the cost of doing something like, extending the duration of their asset purchases to put even further downward pressure on long-term rates, doing something like that in the December meeting is very low cost. And so there's indecision among Fed policymakers of is that really necessary? Is it really going to be pushing on a string? And that's why they continue to call very strongly for fiscal policy to do more. This economy needs more support. It needs more support because, yes, the unemployment rate is coming down quickly. And we've talked about this before, right? But you look under the hood and you've got long-term structural issues in the labor market, like more long-term unemployed folks that may leave the labor market permanently. You know, so we could all say, yes, it's easy to point to fiscal policy and say we need more support, but can the Fed wait for that? And so I think that's the biggest debate of today among economists is, do we get that announcement from the Fed at the December meeting or not? If they stick to their what they've been communicating, that they're only acting if they need to offset a tightening of financial conditions, well, financial conditions are extraordinarily easy today, and yesterday at the end of the day, they were even easier. So we still aren't seeing the catalyst.
But Ellen, there's this pretty unusual public disagreement between the Treasury Secretary and the Fed on some of this, some of these funds and how they get dispersed. What does that tell us about, is someone misunderstanding what you've laid out for the U.S. economy? Is this obstruction? And does this get worse?
Yeah, so I think, it certainly makes it appear that Treasury and the Fed are not playing nice in the sandbox together. This was going to be an unpredictable time coming up to the end of the year when these 13.3 facilities, the special facilities that the Fed put in place to address liquidity and credit availability in the economy, these were set to expire at the end of December. And it has to be a joint decision between the Treasury Secretary and the Board of Governors in order to extend those. Now, the disagreement comes from the fact that these facilities are not being used that much. So wouldn't that tell you that they're not needed? But the point is really not, are they being used today or not? The point is really the optics of them being there as a backstop while we continue to work through, this unknown evolution of the virus and how it will impact the economy. So I would imagine the Fed would really like to extend these facilities and keep them available until that cloud is lifted, which means extending them well into next year. But Mnuchin's argument, right, is return the funds and let those be used for something else because they're not being used sitting in the facilities right now. So it's a difference of opinion, but unfortunately, Treasury can ask for the funds back. They have, and the Fed will need to return those funds at the end of the year when these facilities expire, and then let the next Treasury Secretary refund the facilities, refund the facilities when that Treasury Secretary comes in.
But Ellen, what does it mean for, defaults? Apologies, I'm losing my voice. I'm losing my voice, but defaults.
You sound like Tom Keene.
How much do they lag the real economy? Could we see a wave of defaults, Ellen, into next year, given the trajectory that the U.S. economy is taking?
Yeah, well, so I think it's at least on the household side, which is being addressed. This is really addressing the business side, right? And so far, we've not generally markets sniff these things out immediately, and so we would have expected a pretty big market reaction yesterday. Now, granted, this announcement came late in the day, but at the end of the day, financial conditions eased, and we didn't see a reaction in the credit markets at all. And it's probably because let me just say it may be, because you could see the markets react more today. But if the only implication is that you're going to have a 3 to 4 week disruption until a new Treasury Secretary is confirmed, then credit investors, won't look to sell illiquid corporate bonds. And so that may be why we're not seeing much of a reaction. Is that a given that there's only a 3 to 4 week disruption, though? And I think that's what folks will continue to try to figure out. Is it just a given that these facilities can be funded again under a new Treasury Secretary, or will the shape of Congress at that time make that difficult? And so but we have not seen a response in the corporate bond market. On the personal side, because we've had forbearance programs and we still have not brought all of the jobs back to the labor market that were lost, we are seeing defaults and delinquencies rise there. Still not to a rate that you would expect based on an economy with an unemployment rate as high as it is, but those are on the rise. So I think all of this spells that, we're not out of the woods yet. COVID is still a real issue, and we really shouldn't be having to deal with things today like this of, do we have any kind of support at all pulled before we get out from under the cloud of COVID?
Ellen, thank you so much for joining us. Look forward to speaking to you, I assume, just as we waltz toward Jobs Day and then on to December 16th in that Fed meeting. Ms. Zentner is with Morgan Stanley. Right now, our first word news in New York City. Here's Ritika Gupta.
Thanks, Tom. The Trump campaign lost another one last night. A federal judge refused to block Georgia from certifying its election results. A hand recount showed that Joe Biden won in Georgia by more than 12,000 votes. Earlier in the day, a judge in Arizona threw out a suit seeking an audit of the vote in a pivotal county. And the Trump campaign pulled the plug on its own suit in Michigan. falsely claiming it had stopped the state's vote certification. There's rest split between the top two U.S. economic policymakers. Treasury Secretary Steven Mnuchin called on Fed Chairman Jerome Powell to return money for several Fed lending programs that rely on Treasury's backing. Minutes later, the Fed put out its own message. It urged that all of the lending facilities be kept in place. Mnuchin told Bloomberg that companies don't need more loans, they need grant money, which must come from Congress. And Congress is getting closer to a deal on a $1.5 trillion spending bill that would avert a government shutdown next month. Aides to House Speaker Nancy Pelosi and Senate Majority Leader Mitch McConnell met to hash out details. The talks are separate from stalled negotiations on another coronavirus relief bill. Democrats and Republicans are far apart in those negotiations. Joe Biden says he's picked a Treasury Secretary and he's promised an announcement either next week or the week after. The president-elect says his choice will be accepted by all elements of the Democratic Party, from progressive to moderate. Amongst the names being mentioned, Roger Ferguson and former Fed Chair Janet Yellen. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. Not to turn it into a history lesson or for our international audience an exercise on American civics, but yesterday afternoon in the United States was absolutely original. I can say without question I've never seen it in my life, and I had to go back to a classic Gore Vidal, that 3-volume history that he did culminating in 1876. Only Greg Villiers of AGF has studied Rutherford B. Hayes and Mr. Tilden of New York in this great election of 1876. Greg, it is extraordinary what we are seeing. The only one the president can't fire is the vice president. What do you expect to hear or see from Vice President Pence today and into the weekend?
Well, this is beyond bizarre, Tom. As you know, I think Pence is keeping his head down. He's going to be in Georgia working on the runoffs. But here in Washington, you've got a president of the United States trying to undo the election results in a state that Joe Biden won by 157,000 votes.
Greg, we saw Sass of Nebraska, obviously Romney of Utah. Those are all expected voices of protest. Where's Portman of Ohio, or other selected names you know better than I do?
It's an outrage that so many Republicans have kept their heads down and been silent. That's totally unacceptable behavior. Hopefully the voters at some point will call them on that. What I worry about, Tom, is what else Trump will do in his last 8 weeks. I especially worry about geopolitics.
You know, Greg, I look at this, and there's any number of ways to go here, and we don't have to play Washington Post or New York Times and the outrage that we see in the zeitgeist this morning. Greg, what our audience wants to know is, how does the court system intervene on a strategy so original by this president? Do you expect federal court or state court action, or does somebody go right to the Supreme Court to straighten out a debate back to 1876?
Well, Tom, Trump reportedly thinks the Supreme Court could bail him out, but all legal scholars agree that his cases are without merit. So now he's going to election officials in various states, asking them to decertify the vote.
Can he do
legislatures. It can't be done.
Greg, I'm reading so much on how the president, leaves the White House if he ever leaves. Is there any doubt in your mind that come January 20th, Joe Biden will not be president?
No, there's no doubt. I think that the last attempt by Trump will be to get state legislatures to overturn this. It's not going to happen. If Trump refused to leave, I think that the generals at the Pentagon who despise Trump would physically remove him.
That would be what, in early January, if it were to come to that. What happens in the meantime with the transition? Does the Biden team
that's crucial. There are going to be more regulations.
Go back to the transition. Yeah.
There's going to be more regulations, more firings, more pardons, more geopolitical stories. I particularly worry, Francine, about the U.S. and Iran. Trump has this tremendous antipathy toward the Iranians, and I wouldn't rule out some conflict between now and Inauguration Day.
Greg, I mean, this is just absolutely bizarre. With all of your experience on this, and I should say, Greg, thank you so much for joining us on short notice this morning. Are there institutional structures within the executive and the legislative branch to temper the president's outburst and tone as he drives towards January 20th?
Well, the only force that would moderate him, and you hit on it earlier, Tom, is Republican members of Congress. I mean, we do have an example a few decades ago when leading Republicans went to Richard Nixon and said, it's time to go. But no one, or very few Republicans other than Mitt Romney, have had the courage to do something similar with Trump.
Greg, one of the most bizarre things that I've actually seen on Twitter was yesterday, the GOP retweeting, the Trump lawyer saying this was rigged, it's unfair, he's still president. Who's actually, Greg, keep that thought, because we're just having a couple of breaking news out of Pfizer, and this is extremely important because we understand that Pfizer and BioNTech are planning to file as soon as today for this emergency use authorization of their COVID-19 vaccine, and that would be today for use in December. So it's basically, they're putting the plans today so that they have the vaccine ready to use next month, Tom.
Oh, let's go one more to Greg Valliere, if we could, here this morning. Greg, we had a pandemic briefing yesterday from the White House. Vice President Pence, I believe, did not speak, as Dr. Birx did as well. Do we have a coronavirus task force?
They met yesterday for the first time since July, so you could say that they're not really into it right now. I think that obviously Biden and Fauci and others will be far, far more involved. But no, that's still another outrage that they've gone for 5 months without even having a meeting.
All right, Greg, thank you so much. Greg Valliere there, AGF Investment Chief U.S. Policy Strategist. And we'll get Greg, because I do want to ask about the GOP and that tweet. Now, joining us today from Johns Hopkins to look at the latest news, which is pretty big from Pfizer and BioNTech, is Andrew Pekosh from Johns Hopkins University, where he's Bloomberg School of Public Health professor and virologist. Dr. Pekosh, thank you for joining us. Minutes ago, Pfizer and BioNTech said they plan to file today for an emergency use authorization that could allow their vaccine to be used next month. I mean, this is record time. Your thoughts?
Absolutely. So this will be important because we'll also see some of the additional data that hasn't been released yet in terms of safety, as well as the efficacy data that they've sent some press releases out on. Completely expected. It'll be really important for us to go through the safety data to make sure that there are no signatures there of anything that could be of concern. But certainly everything that's been talked about from the Pfizer and the Moderna vaccine as well, up to date, has been very positive and leaves me optimistic about this vaccine coming down the pipeline.
Dr. Pekosh, so you could see part of the population, the most vulnerable population, especially in the U.S., being administered this vaccine by, I believe, mid to end December. How many people won't want to take it because they think it's too soon?
Well, this is now the critical issue. Many of my colleagues have been using the phrase, vaccines don't save lives, vaccinations save lives. And so the important thing now is to make sure that there's public confidence in this vaccine, that it's safe as well as efficacious. There's been a very fast pipeline to move this vaccine from an idea into something that's ready to be rolled out into the population. Many of the shortcuts, if I can use that term, have really suggested that are just production shortcuts. So they're shortcuts that have allowed the companies to make large amounts of vaccines while they're doing their testing. The safety and the efficacy have not been shortcut in any way, and we'll see that data today in the emergency use authorization statement that comes out.
Andrew Pekosh, is there any debate in the scientific community about whether these new vaccines, RNA, could actually alter your DNA longer term?
Yeah, so far there's been no reports of anything like that in terms of very long-term effects. But again, the vaccine has only been tested for a few months in humans. We do have a wealth of data from animal studies that suggests that those types of things aren't occurring in the animal models that the vaccines have been tested in. But it's an important point to emphasize. As the vaccine gets rolled out into this first group of individuals, and Francine, as you mentioned, it's most likely to be frontline healthcare workers, other medical staff, residents, elderly residents of long-term care facilities and residencies, those highly vulnerable populations. That first round of vaccinations will also come with it additional monitoring. It's not like we'll forget about monitoring for safety and efficacy. That's going to keep going during this first round of vaccinations, where we're really going to try to target the most at-risk people in the population. And the other good news about the vaccine trials is that both Moderna and Pfizer have data that suggests their vaccines are working well in the elderly. And that can sometimes be a problem population for vaccinations. So lots of good signals from the preliminary data. It's really now about an effective vaccination campaign.
Andrew, if Pfizer and BioNTech are ready to file, does it mean that Moderna is also soon ready to file? And is Moderna, easier to distribute because of the freezing temperatures? Are actually not as high, and you can keep it refrigerated for 30 days?
Yeah, so Moderna and Pfizer are both the same types of vaccines. It seems that Moderna is sort of about 2 or 3 weeks behind Pfizer in terms of how they're moving through their clinical trial. I fully expect to see similar results from Moderna. The cold chain issue is an important one. Even though these vaccines are the same types of vaccines, Moderna appears to have tested their storage of this vaccine at different temperatures, some of which aren't as cold as the Pfizer vaccine needs. I'm quite sure the Pfizer company is now testing other storage capabilities for their vaccine. They have set up freezer banks across the country, and many of the distribution companies like FedEx and DHL have set up freezer banks to try to aid in the distribution of the Pfizer vaccine. The Moderna will be easier. It has a longer stability at cooler temperatures and at room temperature. So that vaccine will certainly be, at least right now, easier to distribute.
Thank you so much for all of the insight. Andrew Pekos there of Johns Hopkins with that big news that Pfizer and BioNTech plan filing today for the vaccine.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. America's biggest oil storage hub is filling up again. Stockpiles at Cushing, Oklahoma were at 81% capacity as of a week ago. Cushing is the delivery point for West Texas Intermediate futures. The supply glut has ballooned just as America faces more lockdown measures that could hurt demand. U.S. companies in China are looking favorably on the prospect of a Biden administration. According to the American Chamber of Commerce in Shanghai, just over half of American companies are more optimistic about doing business in China now. They expect the U.S.-China relationship to become more stable. And Hong Kong and Singapore are launching the world's first quarantine-free travel arrangement. Travelers will have to take a coronavirus test within 72 hours of departure, and the bubble could be suspended based on the number of untraceable virus cases. Travelers must fly either Cathay Pacific or Singapore Airlines. And that is your latest Bloomberg Business Flash. Francine.
Thank you so much, Ritika. Now, big news over the last 5 to 10 minutes. Pfizer and BioNTech said they plan to file on Friday, today, for an emergency use authorization that could allow their COVID-19 vaccine to be used in the U.S. next month. So that's coming from the Bloomberg terminal. It's having a bit of an impact on stocks, but we see stocks fluctuating a touch. They're looking, of course, at this very public spat between Treasury and the Fed on what to do with the emergency funds, and then they have positive news that have been really filtering all week from the vaccine front. The U.S. drug maker said that a final analysis of clinical trial data showed it was very effective. Coming up, more Bloomberg surveillance. This is Bloomberg.
side to understand the sensitivities of the other.
Former U.S. Secretary of State Henry Kissinger said the incoming Biden administration should move quickly to restore lines of communication with China that frayed during the Trump years, or risk a crisis that could escalate into military conflict.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there's a Google problem in this country.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Worse place today than we were in the first half of October.
You're not going to get a continuation of this straight upward movement. There will be pullbacks.
In the very short term, we are very much due for a tough time.
If we take a longer term perspective, we have a pretty supportive market.
The Fed has been quite clear that they expect the federal government to hopefully provide more income support.
What they really want is for Congress to do its job, and that's not happening.
Even in supposedly the good places know where there is reflation, central banks are worried.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Friday morning with equity futures going nowhere, but the cross currents this morning, Tom Keene, absolutely phenomenal. Where do you want to begin?
Oh, that's a good question. Where do you begin? I mean, we can go economics, finance, investment. John, I got to go to politics. The shift that we saw in Washington yesterday about 4 p.m. We don't need to beat on this all day. Every other network's going to cover it up and sideways. But this is original actions by a president of the United States, really reminiscent of what we saw in 1876. It's a story our Washington team will cover through the day. We will touch on it in surveillance. But I'll tell you, this election of 2020, John, it continues.
That Tuesday night still continues in some ways, Tom. We'll head down to Washington, D.C. in just a moment. The news of the last 15 minutes, though, is on the vaccine front, Tom.
Yeah.
Pfizer said to be planning to file today for an emergency use authorization that could see their COVID-19 vaccine used as soon as next month. That's the good news, Tom.
Well, it's a good news, but I don't see the market reaction. Remember, but help me here, John. We went Pfizer, Moderna, now Pfizer again. I think that's been the sequence, and each time there's a lesser market reaction.
The tug of war, it continues. And if you think about that tug of war right now, the tension in that rope, Lisa Abramowitz, the tension in that rope is phenomenal. On the one side, the darkening near-term outlook because of the restrictions in the U.S. economy, then the brighter forward outlook if we can get vaccination started next month. Then in between, in the last 24 hours, the Federal Reserve and the Treasury, Secretary Mnuchin and Chairman Powell have been on the same page over the last 9 months. We've had a break.
This, to me, is the biggest story of the day, frankly, because really it draws into question the Fed's capacity to do whatever it can, to do whatever it takes to stabilize markets before we get that vaccine. People have been committed to the Fed, the belief in don't fight the Fed when it comes to corporate credit, when it comes to sovereign debt. Yet, right now, we're having the Fed push back substantially to this proposal for the Treasury Department to take back all unused funds from that $450 billion appropriated under the CARES Act earlier. So today we are going to be hearing from a whole host of Fed officials. We're going to be hearing from Robert Kaplan, Tom Barkin, Raphael Bostic, and Esther George. They've been speaking. They will continue to speak. But the real question is, how vociferously will they push back against the Treasury's latest moves? At 1 p.m., I'm also very interested to see what we see out of the Baker Hughes U.S. rig count. You've seen an increase in inventories in Cushing, Oklahoma. Some of those barrels are actually getting close to the tops that we saw earlier this year. We saw negative future prices. We're not back there yet, but the interesting thing is you're seeing that much less demand as we see the virus increase. And today, President-elect Joe Biden will be meeting with Nancy Pelosi and Chuck Schumer. This is the first time the Democratic leadership actually has gotten together to talk about the plan, how to get some sort of fiscal support package passed, how to figure out how to get Biden's cabinet passed. Very narrow margins here between Republicans and Democrats, John.
November 20th, January 20th feels like a long, long way away.
Yes.
Lisa, thank you. I want to do two things right now. Start with the price action, then we'll get the latest vaccine news. The price action this Friday morning shaping up as follows. On the S&P 500 on the week, we're negative about 0.1%. Not much going on over the week at the index level. The rotation beneath, that's where the debate is. We'll continue that debate on this programme. In the bond market, yield 0.84%. On the session, up about a basis point. And in foreign exchange, euro-dollar, muted price action there. Euro-dollar 118.73. That's the markets. Let's get to the vaccine. Sam Fazeli of Bloomberg Intelligence joins us right now. So, Sam, about 20 minutes ago, we've heard the latest news on Pfizer. Your first take, please.
Yeah, good morning, Jonathan. So obviously it's what we expected, which is probably why, as you rightly said, the market's not reacting much anymore. And if everything goes clearly through without any hiccups, then you could see this approved sometime in the second or third week of December.
Sam Fazeli, we just spoke with Ellen Zentner of Morgan Stanley, and on an economic basis, she talked about the winter of our discontent. Are we setting ourselves up for a pandemic winter of our discontent with these vaccine hopes and getting the calendar wrong where vaccines are farther out than we actually think?
Yeah, so that's an excellent question, Tom, there. I mean, I've seen some people talk about 320 million people being vaccinated in the U.S. by June. If that happens, I think we would all be jumping with joy. I doubt that that will happen. The critical thing is that we're all going to start counting doses and people being vaccinated as soon as this comes out. So I think the winter is going to be as horrible as we'd all expected. The vaccine is not going to make that much difference. At the very least, it takes up to 6 weeks for people to become immune once they've been vaccinated.
Wait.
So none of that changes.
Wait, 6 weeks from the time that people start getting vaccinated to actually feel the full effect. So can you walk us through what the time frame would look like if there was this emergency authorization approval, as Pfizer and the like are seeking right now? How soon before we start to actually see some critical mass of immunization?
Yeah, so initially in January and December and January and possibly into February, I think you're going to be seeing people being vaccinated at the forefront of dealing with COVID patients, etc. I would be very happy to see the general public getting vaccine doses handed to them starting in February.
Hey, Sam, it's great to get you on the programme to react to this news. Sam Fazeli coming on every time we get a little bit of good news around the vaccine. Sam Fazeli there of Bloomberg Intelligence. That news reads as follows this morning. If you're just tuning in for our audience worldwide on Bloomberg TV and radio, Pfizer announcing they plan to file today for an emergency use authorization that could allow their COVID-19 vaccine to be used in America as soon as next month. On the market, Anna Han, Wells Fargo Securities equity strategist, joins us right now. Anna, we started this program by talking about the cross currents for financial market participants. How do you react to the news this morning?
Well, the news this morning is encouraging for equities. And like you were talking about earlier, that tug of war. It's one of those items that might be able to yoink the market a little bit higher. But in the near term, we think that equity volatility and equity uncertainty still remains elevated. So in the immediate term, it's hard to say what's going to win out, the rising COVID cases, or is it going to be this vaccine and, perhaps rekindled stimulus talks on both ends? Maybe that's going to be the winning factor. But, 6 months out, John, we still do think equity risk and uncertainty will decay and equities will march higher.
And I want to talk really importantly here, and I want to drive it into a physics discussion here. You work at Yale. Do we know the coefficients right now? In this divisive week of bulls and bears, are you flying blind? Or within your equation, your expectations that you see, do you actually feel like you've got a handle on how the equations piece together?
For us, we do think we have some sense, especially you see what the rotation has been. As the market has been pretty flat this week, like you mentioned, still underneath the hood, you're seeing certain groups have a higher beta to the more positive COVID news. You're seeing more the cyclicals and the value trade outperforming. And that has been the trend month to date. We think that has legs and has much longer to go in the longer term outside of 6 months.
Okay, in the longer term, in the short term, how much of a hit could that cyclical trade take?
Well, as you know, with cyclicality, it's very sensitive to economic indicators and how the economic recovery is going. So far, recovery seems to be chugging along, but we know the biggest risk it has and has always been what happens with the coronavirus cases. Is it manageable? You know, for example, in New York City, you're seeing schools close, you're seeing restaurant dining get rolled back an hour short. These things are concerning if we get them at a nationwide spread.
They're more concerning, Anna, if we make a policy mistake. And Tom Keene, I think that's why the biggest news perhaps overnight around this market was the gap that's emerging between the Federal Reserve, Chairman Powell, and the Treasury Secretary Mnuchin. Tom, I think for many people in this credit market right now, there's a worry that if the Fed backs away, you start to see a gapping out and a tightening of financial conditions. That would be my concern this morning. I have to say I was surprised that I didn't see a big move in this market. We had a bit of one overnight, then we erased it pretty quickly.
Oh, I think everybody in Washington, at least, is overwhelmed by the constitutional news. But what's so important here, John, to your good point, is the fiscal stimulus timeline has been adjusted. There's no question about that. And I want to go back to beta. You mentioned beta, and let's call it sector beta. To full disclosure, folks, I don't believe in beta on individual securities. Anna, is beta now in the beta change into 2021? Is it an absolute change or is it a relative change? Can I still own tech?
You can still own tech, but we think, you know, for 2021, market can move higher, but we're thinking more pedestrian growth than we've seen in the past 2-3 years. So for us, the game becomes the more relative beta game. We want to know if the market's going to be more pedestrian returns and growth, well, what about underneath that? Which sectors are going to have that relative outperformance, that relative beta? For us, we think it's more that economically sensitive names, that COVID-tied names. So that's what we've been recommending to investors right now when you look out to 2021.
The financials part of that story, Anna, even with the bond market doing what it's done over the last couple of weeks.
It is, John. And within financial specifically, you know, the trotted and beaten down and unloved banks. You know, recently we've pounded the table on being overweight banks for a longer term trade because, you know, valuations look ripe for the picking. And as we've seen, that book to price factor has performed since March. And we think it has more to go. That helps that bank's argument. And, you know, eventually with rates staying at zero, even if we don't get the biggest fiscal stimulus package, and now that we do have concerns, what happens if that credit support rolls off? But seeing if that maintains status quo, that's going to help banks come back, especially longer down the road, we get a little reflation.
We're speaking with Anna Han of Wells Fargo Securities. Anna, I want to go back to something John was talking about, this rift that's emerging between the Federal Reserve and the Treasury Secretary, Stephen Mnuchin, about this extra money that was going toward corporate bond purchases, that was going toward Main Street lending facilities, that was going toward municipal bond purchases. I'm wondering how much this threatens the idea that the Fed can swoop in as a backstop to markets. Well, frankly, this has been one of the biggest arguments for equities and valuations where they are. Does this threaten that on any level based on the sudden inconsistency here in messaging?
Lisa, you know, you're right. It's absolutely a bit of a shock to hear suddenly Treasury Mnuchin and the Fed are taking different stances. As you mentioned, one of the reasons why we can justify such inflated equity multiples, especially on the S&P 500 compared to history, it's this liquidity we've had, this monetary accommodation. And, you know, now you have Treasury Mnuchin asking for a refund. That's unexpected because one of the one steady things we've had through a lot of this turmoil has been monetary support. Now, if that is sapped away, if companies lose their access to capital, that comes into stress for equities, and equities are likely to see a big pullback. But so far, we've seen credit spreads tight, well-behaved, both in the investment grade and the high-yield market. So as long as that can remain capped, we think equity volatility stays muted as well, and, you know, multiples can continue.
Anna, great to catch up, as always. Anna Han there of Wells Fargo Securities. Tom, you have to imagine that Secretary Mnuchin has the best of intentions around this. He's looking to deploy some fiscal ammunition. I just find the communication around it to be really, really clumsy. Two individuals that have been on the same page and suddenly starting to split at a difficult time for this economy.
We're not in the job of speculation, but the speculating of the speculation and rumor, John, was he ordered to do this or did he do it unilaterally? and what was the why of this. And I would suggest, John, that's a mystery today. Maybe it gets solved today. Maybe it doesn't with the other distractions that the White House has.
Well, you're right, it's a mystery, and you're right that we're speculating, but one thing we're not speculating on is the outcome. The outcome is there for all to see. It's a communication blunder to see the chairman of the Federal Reserve and the Treasury Secretary on two different pages at a time when the economy is decelerated.
On radio, this works. I got fingers left over of the blunders going on in Washington among all the parties right now. I mean, in the blur of it all, it's just another major blunder. You're right.
No market fallout, though. We'll talk about that through the program. Coming up on this program, Jared Bernstein, Center on Budget and Policy Priorities, Senior Fellow and Advisor to President-elect Biden during the Obama administration. That's coming up a little bit later this morning. From London and New York, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. Pfizer and BioNTech are asking U.S. regulators for emergency use authorization for their coronavirus vaccine. If the FDA says okay, the vaccine could be available next month for high-risk populations. Earlier this week, the drug makers reported that a final analysis of clinical trial data showed the shot was 95% effective at preventing the disease. Another legal setback in President Trump's bid to overturn Joe Biden's election victory. Last night, a federal judge denied a request to halt Georgia's certification of its election results. That's supposed to take place today. According to a hand recount completed Wednesday, Biden won Georgia by more than 12,000 votes. Meanwhile, President Trump is now reaching out directly to Michigan lawmakers to try to overturn the state's vote. Bloomberg's learned the president will meet with Republican leaders of the state's legislature today. Some Trump allies have urged him to persuade legislatures in states he's contesting to overrule voters and give him the state's electoral college votes. A warning for the European Union. The leaders of France and Belgium are urging the bloc to step up preparations for a no-deal Brexit at the end of the year. That's in case last-minute talks with the UK don't result in a trade and security agreement. If there's no deal, businesses and consumers will face disruption and higher costs because tariffs and quotas will return. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Federal Reserve has been approaching dealing with the dollar I think, has been in a positive direction. Our interest rates are as low as they have been in modern history, and I think that is a positive thing.
President-elect Joe Biden there on the economy, the dollar, and the Federal Reserve as well. He did nail that, didn't he? It was a little bit, I don't think there was much conviction behind that statement. That's all I'm going to say about that, Tom.
John, I'm going to give the President-elect some major slack there. It takes practice to say not. Come on, look at me. I deal with this every day. It takes practice, folks, to say nothing. You gotta, it's a skill, and I'm sure the President-elect will figure that out.
I think it's fair to say he basically said nothing. I mean, to be honest with you, I was going to let it slide. I'm surprised you jumped in and took a dig, but I was going to let it slide. Look, the news on the economy front from this administration, the future administration, Tom, is that next week we should find out who the future Treasury Secretary might be. President-elect Joe Biden suggested we might find that out before Thanksgiving or shortly thereafter. And the speculation game, down to about 3 names, Ferguson, Brainerd, maybe even Yellen.
We'll see all really wonderful candidates, and it's a fun time to see how any presidential cabinet is put together. It is an interesting time, if not fun time, in Washington. Emily Wilkins joins us now, Bloomberg Election 2020 reporter. Dr. Wilkins, Dr. Emily, we've got to talk about the cacophony yesterday. Let me give you an open question to start. Within Election 2020, in the blur of this, what are you focused on this Friday?
Oh, there are a lot of things to focus on. I think a lot of people in particular are looking at sort of this continued what the Trump campaign is trying to do to kind of sort of deal or not deal with the fact that the president does not have the electoral votes to win again. I mean, the latest move, Trump has invited leaders of the Michigan legislature to come meet with him at the White House. This is a Republican-led legislature, even though the governor is a Democrat. And it appears to be part of a strategy on the Trump campaign. Maybe if they could persuade Republican legislatures to overrule voters and give him the electoral college votes, maybe as a path.
I mean, Emily, a solution there is maybe they go visit Mr. Biden as well and make it ecumenical or bipartisan, whatever. Emily, I'm watching Vice President Pence. What would you expect to hear from the Vice President in the next 24 hours?
So all the Republicans who are going down to Georgia as Vice President Pence is kind of have this very unique line to walk right now. They have to convince Republicans to turn out and vote in the upcoming Senate elections. And one of their big arguments is that, you know, they need them to come out so Republicans can take control of the Senate. The problem is that Republicans are also still trying to play the game where they're not really saying that Trump has lost the election. And because if the Democrats win Georgia, it's a 50-50 tie. What that basically means is that they kind of have to encourage voters to come out without admitting that Trump has indeed lost.
I got to say, Emily, from the political side, this is a lot of the focus. From the market side, the markets have moved on. They basically think that Joe Biden is going to take the White House on January 20th. And the question is, what will be his agenda? What will be his to-do list? And how effective will be able to roll out some sort of vaccine distribution mechanism so that we can get over this pandemic quickly? Where are we on that front with this sort of cooperation of both administrations and any move toward that direction?
You know, it sounds like at this point, the two administrations haven't really been talking a lot with each other. I mean, once again, the federal government has not formally recognized that we're going to have an incoming Biden administration, and he's not been able to start the transition. That said, Biden has already started talking about his plans for coronavirus. He's been talking about sort of really encouraging people to wear masks, to starting up a infectious disease task force that was there under the Obama administration, but was sort of downgraded during the Trump administration. And so I think we're going to see a lot of strong messaging on coronavirus from the Biden administration. The question is whether he will have a Senate that is slightly in Democratic control and able to work with him, or whether he's going to have to work with Senate Republican leader Mitch McConnell on getting something done.
We need to get to January 20th first. Tom, in the last 24 hours, the CDC warned against traveling for Thanksgiving. California has ordered a late-night curfew. New Hampshire has issued a mask mandate. And Rhode Island has ordered a 2-week pause, but that won't begin until November 30th. Tom, they're just some of the moves in the last 24 hours. We started this program with the hope of the vaccine being deployed in America next month. That's next month. Yeah, that's when it starts. We still need to get through all this.
Anna Adney on Bloomberg has a terrific article on this morning. I'm literally putting out on Twitter right now. Emily Wilkins, we had a coronavirus briefing yesterday. I'm absolutely fascinated by this. Do we have a coronavirus panel?
I mean, there is in the White House a coronavirus task force, although there has been some criticism about how often that has wound up meeting and how often.
What do they do? Emily, come on, you know all the dirt. What do they do every day?
I mean, it's a group of different people, right? Like, it includes Vice President Pence. He obviously has different things on his plate than simply the coronavirus task force. But they're supposed to be the ones looking at the response, figuring out how to go forward, figuring out what guidance to give, if any guidance to give at this point, how much to leave to the states. And at this point, the answer has been a lot. The federal government has left a lot to the states. And I think we're going to see under the Biden administration a much stronger federal government when it comes to addressing how the nation needs to respond to the coronavirus.
We don't live in an authoritarian regime, and that ultimately has been the difference between the way, say, China has handled this situation and the way that the United States and Europe has handled this situation. But as Bill Gates pointed out, and we played the tape a little bit earlier this morning, Tom, the better comparison is probably the United States, Europe, with places like South Korea, places like Australia. And it's not just that the federal government has left it to the states are leaving it to individuals. Now, the administration would say that's the American way. Who am I to argue with that? But when you hear Governor Herbert basically suggest of Utah that Thanksgiving and mixing households is probably not ideal, but we'll leave it up to you, Tom, what do you think is going to happen?
I don't, it's so original, John. I really don't have a strong opinion on Thanksgiving. John, this is a holiday in America. This is the fourth Thursday of November, and, you know, we've got to get to it and move on from Detroit Lions football. I really don't know what's going to happen at Thanksgiving, other than clearly, John, as you noticed yesterday with United Airlines, travel is plunging right now in America.
Yeah, Emily, great to catch up. Appreciate your time this morning. Thank you. Emily Wilkins there of Bloomberg Government. This is the situation right now, working through a really difficult moment. And I think even here in the United Kingdom, Lisa, we've been trying to balance restrictions with civil liberties, the independence to make your own decisions to do things. But ultimately what happened is that the healthcare system in some parts of the country just became overwhelmed. And that balance just wasn't part of the equation anymore.
It's not just that, though. I think that people underestimate the exponential aspect of the virus, the idea that we cannot necessarily get a handle on just how bad it is until it's already too late, right? And the idea that it's not just death. It's also the idea that there are long-lasting implications, ramifications from the virus, as Dr. Quick was talking about yesterday. I will say you are seeing activity slow. You are seeing gasoline demand decline the most week over week last week. Since May. You are seeing mobility drop. People are responding without the restrictions and the civil liberties, John. And this has been the story, and it will continue to be the story as job listings fall off the map in the Midwestern states where this really is the worst right now.
John, where does she get those statistics from? Lisa, that was like lights out, bringing in gasoline demand as a real...
I read.
You know, it's just...
I read stuff.
I don't, you know.
Well, the Thursday balance sheet headline dropped over at the Fed yesterday, and then you start to read about gasoline demand shortly thereafter that. I have to say on the policy front,
I was looking at Todd's Manchester City. I mean, I know.
There's your problem.
Let me tell you, Tom, that's not the focus here in the UK right now. You guys are looking ahead to Thanksgiving. We're looking ahead to Christmas. And there has been some communication, some reports that maybe the government will allow households to mix on Christmas Day in the UK. But if they're going to allow that, it means that we might have to have a longer lockdown going into Christmas or after Christmas, Tom. Now, can you get your head around that?
No.
They're going to allow the households to mix on Christmas, and then you're going to have a longer lockdown or a longer lockdown before. I mean, come on. The whole thing is utterly ridiculous. You either need the restrictions or you don't.
Well, they should have the keen strategy. We just ignore Christmas because nobody gets along. So, you you just keep it short, sweet, That's all you do. Vet bill gets a gift.
Is that how you get through? The next month.
Who mixes? Lisa,
the wedding anniversary that week as well, Lisa. Can you imagine how nice that week is at the Keane household?
I wonder why you drink so much.
Then the day after is the wedding anniversary, and they just ignore each other. Is that the plan, Tom?
Oh,
the week after Christmas to
we
ignore
were going
each
to go
other?
to Venice and then to Kazakhstan, and instead we're like all Manhattan.
Kazakhstan was
How did
going
Kazakhstan come into this?
Kazakhstan's that's on our list. That's on our bucket list. We want to nail that.
By you, do you mean you and Vet Bill?
No. Me and Mrs. Keane.
But at this point, Lisa, it'll be him and the dog solo once again, alongside Tom Keane and Lisa Bravitz. I'm Jonathan Ferro
Merry Christmas.
from London and New York this morning. Good morning,
roasting.
Tom Keane with a Christmas song. Carry on.
Oh, no, I can't.
We're listening.
Jared Bernstein won't show up if we do.
came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
From London and New York, this is Bloomberg Surveillance, and here is the price action this Friday morning. The confluence of things going on around the world, the cross currents right now are absolutely unbelievable. On the week, though, the S&P 500 pretty much unchanged coming into Friday. Right now, unchanged as well on the S&P. Beneath the surface, though, I think the relative trade that everyone's looking at right now is big tech versus small caps. So we check in on that every morning, so let's do that again. On the front foot, the Nasdaq pushing higher by about a little more than 0.1%. At the back foot, you've got the Russell, the small caps, down by about 0.1%. That tug of war that we keep beating the drum about sound like a broken record, but the tension in that rope right now, really tight. Where does it break? Which way? The short-term risk, do they take over? Or the forward outlook and the better hopes there? Is that going to be the dominant issue? If you get to the bond market, here's the dominant issue this morning. It's the spat between the chairman of the Federal Reserve and the Secretary of the Treasury, Mnuchin, Powell, not on the same page about those emergency liquidity programs and that credit backstop. That's important for a couple of reasons. If you don't have that Fed put in the credit market, where does it leave the Fed? Do they have to load up on bonds? Do they have to extend the average maturity of their bond buying through the Treasury curve to buy even more? In the Treasury market this morning, unchanged again at 84 basis points, 155 on 30s, 84 on 10s. But a story of the last couple of weeks, since Monday, the curve is basically exactly where it was Monday before the vaccine news. The 10-year, pretty much exactly where it was the Monday before the vaccine news. This bond market hasn't repriced in the same way the equity market has. Looking forward, when you're thinking about demand, what do you check in on? I want to finish on the commodity market because I think this is really, really important. Chinese growth, the Asia-Pacific, EM, there's a little bit more optimism out there at the moment. And I think in the market, if you want a pure gauge of where demand is in the global economy right now, there's only a couple of places you can go to, and the commodity market is one. Brent crude, WTI advancing once again. WTI over the last month up about 17% over the month. On the session up 0.6%. And I'll leave you with copper on the LME up about 1.4%. Tom Keene, multi-year high on copper. This commodity market is pretty resilient in the face of some of those near-term risks.
John Farrow and I at the Dorchester Hotel during the LME conference. I can see it now. We saw that years ago. Thank you, John. That's great. I would note, folks, dollar Mexican peso really showing Mexican strength. You may get out to a breach of the 20 level down to a 19 handle, and that shows some of that EM strength that we've been talking about through the week. What we like to do at Surveillance is not talk to the fancy people, the pundits, punditry more pundits. We like to talk to the people that they read and they listen to. One of those is Jared Bernstein, an esteemed career at the Center on Budget and Policy Priorities, and a senator from Delaware a few years ago discovered this and said, Dr. Bernstein, join the team. Jared Bernstein, part of the transition team for the president-elect. Jared, I know we need to break some news here, and I do want to know who the Secretary of Treasury is going to be, but I really want to go to transition minutia. You are lined up, I think, to walk champ and champion major. You're going to be like first dog walker for the Biden administration. What is it like being on a transition team?
I think the most important thing to recognize there is that this is such a critical moment for a smooth, normal transition process to happen. And what's happening right now is anything but normal. Remember, I was the chief economist to the then vice president-elect back in 2008. And at this point, we were actively planning. Remember, that was the Great Recession. We were actively planning for a fiscal relief package that was legislated less than 4 weeks after Obama and Biden took office. That's what should be happening now. But this is not normal, my friends, for this transition to be thrown off this way. And it's coming at great cost in terms of health and in terms of the economy.
Okay, a delicate question then. And, you know, we make fun of Champion Major, the dogs returning to the White House with the president-elect. Jared, what's so important here is then what is your action plan if this is transition interrupted? Are you planning out a budget process without the knowledge of the present White House?
Well, certainly we are obviously, and you'll hear the president-elect talking about this, thinking about a fiscal package with great urgency. One of the things he said, and by the way, president-elects, they like to wait till they're in the office to start moving legislation. He has said that is not the case when it comes to fiscal relief. That should happen in the lame duck, and I couldn't agree more. But if you're talking about preparing for this job that he is, that the American people have elected him for, you've got to talk about virus control. And that, of course, you can see the president-elect is very active on planning virus control. But, you know, his Vivek Murthy, who's the former Surgeon General on the COVID team, recently talked about how important it is to get that information in transition from folks from folks that are currently in the White House. And that's not happening. Again, avoidable suffering to Americans in terms of health care and economic hardship because this transition is not occurring the way it should.
Jared, we're lucky to have a bit of time with you this morning, so we can talk about the transition a little bit more in just a moment. I want to talk about the fiscal plan just a bit with you. The Republican Senate was the obstacle to getting the deal that Pelosi wanted. We're still likely to have a Republican Senate. We have one now. We'll likely have one after January as well. What is it that you think that President-elect Biden can achieve that Speaker Pelosi couldn't?
Well, I think the way you teed it up is exactly right. I mean, the president-elect continues to talk about how people can decide to cooperate, and now is the perfect time for them to do so. We have heard positive sounds about a fiscal package from members of the Republican squad, including McConnell himself. What we're not seeing is the kinds of negotiations that the president-elect has been stressing, and that needs to happen as of yesterday. You know, we have an unemployment insurance system where over 20 million people are making claims, and at least 12 million, we recently learned, could lose their support as it expires at the end of the year. We have over 400,000 small businesses that have closed. The long-term unemployment is increasing at a rate we haven't seen in the history of that series. We learned this morning that according to ZipRecruiter, job growth is slowing, not just in places where the virus is surging, but in other places as well. So I think the urgency of the economic situation and the health situation, which of course are intimately connected, just has to reach legislators. I'm an economist. I'm not a politician. I can't tell you the strategy to get them there, but I can certainly stress the urgency of this moment in that regard.
Well, let's talk about the urgency and the size, because currently there is a $1.5 trillion spread between the two sides, and I'm not sure how that's closed at all, if it has at all, in the last month. What kind of size package do you need in a moment like this, Jared?
I think probably the best way to think about it is start from the bottom up and start adding up what's necessary. State and local budgets are really hurting. Remember, they can't run budget deficits. The unemployment insurance system, as I mentioned, needs work. Nutritional support has to be on the table. There's lots of people facing potential evictions and foreclosures, so we need those programs to continue and to be re-upped. And of course, virus control is at the top of the list. Now, if you start summing that up, you'll get into the neighborhood of the HEROES Act, which is what the president-elect was touting the other day, and at least the second version of that was somewhere in the $2 to $3 trillion range. But let me say this. I think what matters most right now is speed. So there's speed, their size, their composition. They're all important. But I would put speed at the top of the list because I think this economy is at a precarious point.
Jared, can you elaborate on that? If speed is the biggest issue right now, do you think that Democrats should cave to the Republican demand of a smaller bill and just get something, anything passed, even if it's substantially less than what you think is required?
You know, I just don't think cave is the word that anyone should be thinking about up there. It's actually cooperation, working together to serve both the healthcare and economic needs of the American people. And, you know, as the president-elect has stressed, I mean, there are avoidable deaths that could occur if both sides would get together and start cooperating. Now, by the way, Ron Klain, incoming chief of staff, someone who knows a lot about pandemics. He pointed out something the other day that I want to stress. He said, you know, yes, vaccine, that's important, it's essential. But, you know, vaccine without vaccination doesn't get you very far. So along with all this other transition planning that should be happening now, the manufacture and the distribution of the vaccine is essential planning that has to occur. And I don't think anybody needs to cave to each other to get to work on serving the American people in that regard.
Jared, given that there is some sort of bridge right now to try to get us through the next very difficult couple of months, what do you think is necessary when it comes to potential infrastructure spending, which has been something that's been sort of touted out there, and how should we pay for something like that?
Yeah, that's a really good question. I think that I focus so much on relief and this fiscal bridge to the other side of the crisis. I don't think we should forget, and certainly the president-elect has an agenda that is extremely, I think, rich and important in this regard. That simply getting to the other side of the crisis back to where we were isn't nearly good enough. We have to, the way he puts it, is build back better. That is, have a far more resilient economy on the other side of the crisis. And resiliency in the case that you're raising has to do with investments in clean energy and infrastructure, healthcare infrastructure, safety net infrastructure, an unemployment insurance system that's up to the task, a healthcare system that's up to the task. And all of those investments, I think, need to be made. Now, in terms of pay-fors, that's a discussion that's going to have to happen when the president-elect becomes the president. We start those negotiations. I will say that in terms of relief packages right now, it is essential to recognize that interest rates are so low and locked in at such a low rate. So government borrowing, given the return on the kinds of investments I'm talking about, I mean, we can literally save lives at an extremely favorable interest rate. And the idea that Congress isn't acting with urgency to do that right now, I think is just a huge mistake.
84 basis points on a 10-year. Jared, great to catch up. Appreciate your time, sir. Come back soon. Jared Bernstein there of the Centre on Budget and Policy Priorities. Speed, size, composition. The speed right now, severely lacking, Tom Keene.
Yeah, the most intelligent thing I heard there, unfortunately, Lisa, was from John Farrow, which is, John, there's a Republican Senate. So I don't know how, I mean, I get Dr. Bernstein's enthusiasm here, you know, president-elect and all that.
I'm with you.
But they're running right into a Republican Senate. You know, I don't get it.
Let's put our differences aside and negotiate on my terms. That's never the kind of approach that's going to work, Tom. And right now you've got a $1.5 trillion spread between, say, the HEROES Act, which is what, $2-3 trillion? What's $1 trillion between, friends? And the $500 billion that Leader McConnell had put on the table.
I think it only goes back to the job economy. If the job economy turns unemployment rate higher, maybe that changes the dialogue.
Just had a little bit of drip feed of bad news this week. Retail sales first, then claims. Up next, Terry Wiseman, Macquarie Director of Global Currencies and Interest Rates. Looking forward to that conversation. From London and New York this morning, good morning. We're down 3 on the S&P. We're negative 0.1% of 1%. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. If the FDA gives the green light, that coronavirus vaccine from Pfizer and BioNTech could be used in the US next month on high-risk populations. The drug makers say they will file today for an emergency use authorization. Earlier this week, they said they had a final analysis of clinical trial data showed the shot was 95% effective at preventing the disease. The Trump campaign lost another one. Last night, a federal judge refused to block Georgia from certifying its election results. A hand recount showed that Joe Biden won in Georgia by more than 12,000 votes. Earlier in the day, a judge in Arizona threw out a suit seeking an audit of the vote in a pivotal county. And the Trump campaign pulled the plug on its own suit in Michigan, falsely claiming it had stopped the state's vote certification. And Congress is getting closer to a deal on a $1.5 trillion spending bill that would avert a government shutdown next month. Aides to House Speaker Nancy Pelosi and Senate Majority Leader Mitch McConnell met to hash out the details. The talks are separate from the stalled negotiations on another coronavirus relief bill. Democrats and Republicans are far apart in those negotiations. America's biggest oil storage hub is filling up again. Stockpiles at Cushing, Oklahoma were at 81% capacity as of a week ago. Cushing is in the delivery point for West Texas Intermediate futures. The supply glut has ballooned just as America faces more lockdown measures that could hurt demand. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
A sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough. So the next couple of quarters is going to be very challenging.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
Robert Kaplan, Dallas Fed President, and Loretta Mester, Federal Reserve Bank of Cleveland President, speaking to Bloomberg in the last 24 hours. Alongside Tom Keene and Lisa Bravis, I'm Jonathan Ferro. I have to say, I've been lucky to catch up with President Mester 2-3 times over the last 9 months or so, alongside Michael McKee. Tom, even though the momentum in the U.S. economy has been really quite impressive, very impressive for that matter, going into the back end of the year, the tone that President Mester took in that interview, long-winded responses, but very direct, and they weren't towards us, let me be clear about that. They were towards Capitol Hill at Washington, D.C., pleading for more fiscal help.
It is their geography. John, I've done a lot of reading on this over the years, and folks, for those of you particularly international, when they went down Madison Avenue to J.P. Morgan and said, Mr. Morgan, you got to fix this, they set up the Fed, and the only way they could do it, John, was the massive distrust of agricultural America with urban America, which basically meant New York. So they set up the regional Feds, and, you know, Mike, it's John, it's real simple. They have each of them a character, and President Mester is colored by the challenges of the manufacturing Midwest out of Cleveland as well. Terry Weissman knows all this history with Macquarie, Director of Global Currencies. Terry, I love in your note, you talk about after the Biden effect. What's the Biden effect and what happens after?
I think I was referring in the note to the effect of the Biden administration on the relationship between the U.S. and China. This was not really a domestic issue so much as it was an international issue. We do believe that with a Biden administration coming into office, the relationship with China will change. It will be a lot less of commercial combatants. It will not be about imposing tariffs on imports into the U.S. It'll be more human rights oriented. It might be more sanctions oriented. This will mark a shift. I think generally the markets will like that. There'll be fewer surprises, but there will also be fewer surprises for China as well. And it's one reason why the dollar has depreciated relative to the yuan in the last few weeks in anticipation of this effect coming out of the Joe Biden administration.
Terry, we still have 60 days at least before we deal with the Biden administration and then talk about what happens after that. And in the near term, there is a dissonance that's growing between the Federal Reserve and the Treasury Secretary, Stephen Mnuchin, that emerged yesterday about the extra funds that were allocated to the Fed under the CARES Act. I would love your take on how significant it is that the Fed might not have as much money to commit to municipal bonds, to corporate debt, to possibly lending to businesses.
Yeah, so I'm going to try to downplay this dispute or this quarrel between the Fed and the Treasury. It's not that it's not important. It's not that it can affect market sentiment adversely. Clearly it can, and we saw when the news came out last night that stock markets wobbled a little bit, but they did recover. The reason I'm putting it into context is because there are much more grave situations lining up for the U.S. economy in the next few weeks. One of them, plainly, is this fiscal cliff. We may see at the end of the year the moratorium on foreclosures, on student debt relief, on the extra unemployment funds expire. And when you think about that, the size of that fiscal cliff, it really makes this quarrel between the Fed and the Treasury look small. It's small potatoes compared to the stuff that's happening on the fiscal side.
Terry, how much damage do you think we could do to this economy? We wake up again this morning to more good news around the vaccine. Pfizer could get that emergency authorization. That could be used. We could be seeing vaccinations next month in America. How concerned are you about the damage we could do between now and really getting a ramp up in that vaccine rollout?
Yeah, so this is a battle between the forces of light and the forces of darkness. The forces of light are the vaccine and its efficacy and the speed with which it can be rolled out, not just in the U.S., but globally. The forces of darkness is the fiscal cliff I just mentioned, the spread of the pandemic itself and the so-called second wave that we're seeing in the Northern Hemisphere winter. I don't know how the markets will adjudicate or settle out this war, this battle between these two forces. My suspicion, however, is that the forces of light will win out. In other words, the fact that there's going to be a vaccine by the spring, that it will be, pretty dramatically distributed, not just in the U.S. but in the Northern Hemisphere, that will serve as an anchor for market sentiment, even though we will see a double dip in growth in the fourth quarter and early part of the first quarter. I also am figuring into all of this the prospect that Congress will come to terms with the administration and pass some sort of fiscal relief between now and Inauguration Day. And that will help to at least alleviate part of that fiscal cliff that we're looking at the end of this year.
Thierry, you talk about lightness and darkness. It sounds like a nerd episode of The Mandalorian. We'll have to see how that goes. Thierry, I notice on Bloomberg Dollar Index, we are back to January of 2015. Basically, the dollar's gone nowhere for 5 years. Which way does it cut, or does it stay in this remarkable range?
So we actually think that the dollar is going to weaken going forward. It may not be a dramatic weakening. I know that some houses on the street are talking about a 20% decline in the value of the dollar's index between now, let's say.
Okay, I don't mean to interrupt, but why is Steve Roach wrong?
About the dramatic decline?
Yes.
Because there's certain advantages that the dollar will still have, even in a Biden administration. We can make a case that the U.S. growth will still have a premium over Europe and the other poles of the global economy. It's not as if U.S. growth is going to collapse. The dollar will still maintain part of its reserve currency status. Reserve asset managers will not rotate en masse out of the dollar yet. However, we do see some weakening. So it's not as if he's wrong. He's just, partially wrong, if you will. The reason the dollar will continue to weaken and potentially the DXY will break through that 92 level support is because there are good things happening in Europe, despite it all. There is unity on the fiscal side. There's going to be a little bit more fiscal expansion in Europe next year than there will be in the U.S. If anything, the U.S. is going to see a decline in its cyclically adjusted fiscal deficit. You can also make a case that to some extent reserve asset managers will rotate out of the dollar somewhat and back into the euro. They haven't done so since 2012. Maybe the time is right for that to happen. And by the way, to the extent that we do get a vaccine next year, it's going to help cyclical stocks. And that is going to work to the benefit of stock indexes outside of the U.S., in Europe, in Asia. Remember, when people think of the U.S. stock market, they think of growth. When people think of the stock markets abroad, they generally think of value and cyclically oriented companies. So if that rotation takes place, it will also hurt the dollar to the extent that, managers will have to buy foreign currencies to buy foreign stock markets. So there's a whole host of reasons why the dollar will weaken, but it's not a catastrophic weakening.
Think of value and how much money we've lost trying to play that European trade. Terry, great to catch up, sir. As always, Terry Wiseman there of Macquarie.
Very
Terry, appreciate it. Why Steve Roach is just partially wrong with Terry Wiseman of Macquarie.
No, it's a huge debate, John. It's a huge debate, and this word magnitude is used. Magnitude's underplayed, particularly in American media. The British do it better, but magnitude matters, John.
I agree, sir. Coming up on this program, Jim Paulson, Luthold Weeden Capital Management Chief Investment Officer from London and New York this morning. It's a beautiful day in Washington, D.C. Good morning to you all. This is Bloomberg.
In our interconnected world, if people in low and middle income countries miss out on vaccines, the virus will continue to spread and the economic recovery globally will be delayed. Equitable access is in the national interest of each and every country.
But this also means if we have a vaccine, we should have a common approach to give a fair share to everyone so that the most vulnerable groups, the frontline workers and the healthcare workers, for example, are the ones who get the vaccine first.
We're donating another $70 million to fight COVID-19.
$50 million of that will be for buying vaccine doses for low-income countries, and another $20 million will be for researching even further and new vaccines altogether.
Il nous faut nous assurer que les conditions réglementaires et politiques sont toutes réunies pour un accès le plus large et rapide possible à ces produits, tout en respectant les standards internationaux de qualité. C'est pourquoi la France propose que puisse être rapidement adoptée une charte d'ACTA qui réaffirme ces grands principes: partager la connaissance, soutenir les systèmes de santé, avoir des produits rapidement accessibles et abordables.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Worse place today than we were in the first half of October.
You're not going to get a continuation of this straight upward movement. There will be pullbacks.
In the very short term, we are very much due for a tough time.
If we take a longer term perspective, we have a pretty supportive market.
The Fed has been quite clear that they expect the federal government to hopefully provide more income support.
What they really want is for Congress to do its job, and that's not happening.
Even in supposedly the good places know where there is reflation, central banks are worried.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrell, Lisa Abramowitz, and Tom Keene. Love to see Jeffrey Yu there of BNY Mellon in our opening, a smart conversation with Mr. Yu this week on all the back and forth. And that's what we see on this Friday. We're setting you up with the here and now, the news flow, including out of Washington, but also how to get ready for the week and how to stagger in December towards a December 16th meeting. John Farrell, do you think the Secretary of Treasury is going to be watching Mr. Powell's press conference?
I hope they speak before they get to Mr. Powell's press conference, Tom. That's about a month away still. These two need to get on the same side. It's not good to wake up ever to see the chairman of the Federal Reserve and the Treasury Secretary on different pages on an emergency program, Tom, that, let's be clear, has really helped keep financial conditions loose at a really tough time for the U.S. economy. And I'm surprised, maybe even shocked, that this market is where it is this morning based on the spat between those two individuals.
Well, there's a few distractions in Washington. We're not going to delve into them right now, but what you need to know is maybe it was beneath the radar off of President Trump's efforts to move election 2020 forward. Lisa Abramowitz, it devolves to a market which, frankly, to me, looks like the fourth week of August when Pharaoh's taken my vacation days. Why is the market dead, Lisa?
Because there's so many cross currents. How do you price in the future with the present that very much is moving and is dynamic? And this has been the conundrum. And frankly, we priced in all the good news from the vaccines to the point that when we get an additional bout of good news, like we got this morning from Pfizer, seeking emergency authorization today, possibly to start giving these vaccinations out as soon as next month, the market doesn't respond. It's baked that in. What it doesn't know is the scarring and the effects of the near-term pandemic getting worse and what that might mean.
Yeah, Lisa, I don't get it. I mean, the summer this year, you're Racket River, you're going Portage, and you're going from Lake 4 to Lake 5 and that.
I know you're jealous.
I'm walking Vetville in Central Park, and Farrell's doing 3 weeks in, Italy somewhere.
Yeah,
I mean, John's just got it going as well. John, seriously, give us an update on the pandemic on the continent in your London this morning. Is it, in what way is it different than here?
Look, things are locking down. It's different in that schools are still open. That's a different approach in the United Kingdom compared to the United States, especially in New York City. They've closed everything else pretty much, but the schools are still open. For Europe, it's still about that fiscal stimulus plan at the EU level, which still hasn't been rolled out, and I don't think has had enough attention paid to it over the last couple of months.
Strongly. Yeah.
Hungary and Poland aren't coming along for the ride, and Europe's doing what it does best, arguing with each other and ultimately going nowhere.
And beneath the radar, the Bundesbank this week, totally beneath the U.S. radar, saying green. I don't know if we want to do green on debt. We will see about that. On the data, I got a 3-second data check. Farrell's going to do better on one of his properties, the Open. Look for that mid-morning with John Farrell, and he'll do a better data check on the real yield. Hit his late afternoon here this morning. I'm going to go futures -3, Dow futures -38. The VIX is impressive, seriously. 22.53, showing the optionality. I'm selling it. I'm doing it great. I don't have a wall, though. If I had a wall, I'd do better. John, if I had a data check.
You want to walk?
Like the Pharaoh wall, where I would walk over. Come on, it'd be great. I could
carried over.
I could go like that. It'd be great. Okay, let's get started with a serious, with a walker. That's why I don't do it. Let's get started on radio and TV right now with James Paulson. He's with Luthold Whedon Group, and he writes brilliant, smart notes where there'll be one phrase where you go, God, how did he think that up? Jim Paulson, help me with option floor. We have an option floor within your bull market. What's an option floor?
I think we do, Tom. I kind of think the overall stock market today, because of the vaccines, is a little bit like a covered call, where you can be a bull, there's upside, but if there's not, I think there's a floor under this market because of how close the vaccines are to being implemented. If we're talking spring, a few months, if the present discounted value of that puts a floor under this market, can only sell off so much before it's going to bring buyers in, just looking at the present discounted value of 2021. So that the vaccine announcement, even though it isn't here, in the sense that it's coming, I think gives you upside without as much downside as you had before the announcement, much like a covered call.
I think, Jim, a lot of people share that view with you right now. I think many people are just uncomfortable being short this market going into what could be something really transformational, which makes me wonder what it would take to see some real capitulation, Jim. What would it take?
Well, I think that I do think there's bullishness about 2021 and bearishness in the short term. And you almost kind of wonder, Jonathan, it might work out the other way around. What if the market just runs right through this period where everyone's highly worried, and then maybe it stalls once we get to the spring or summer? In other words, it's sort of, buy on the fear and sell on the trumpets when they come. And I kind of wonder about that a little bit, just because there is so much short-term bearishness and longer-term bullishness right now.
So is there anything in the short term that could transpire that would affect your view longer term, not necessarily with being a bull, but in terms of valuations or in terms of what you want to buy?
Well, certainly, Lisa, the pandemic, if the cases keep surging and death rates go up, I mean, that's the biggest risk. There's no doubt about that. That could take the economy down if we have to do a complete shutdown again. I think the odds of that are low. One of the reasons I think the economy may do better than people think is that you can't shut down what you've already shut down. I mean, we're shutting down restaurants, hotels, airlines, gyms that are already, mostly shut down across much of the country. 75% of the economy or more is probably pretty impervious to this. They're already at home, whether we shut down tomorrow or not. So I'm a little less worried about the economic fallout in the short term than most people are overall. And I do think that once those vaccines hit next year, we're going to have a big year, 6% growth. What I don't know is how far ahead, to Lisa's point, how far ahead are we already pricing a lot of that in?
I mean, Jim, this is so important, this conversation we're having, folks. And Jim, I want to bring it to Minnesota, and that you and I grew up with 3M was sure money. Minnesota mining and manufacturing was free money, minting money, because they always adapted and adjusted. There's that belief that, you know, corporations will adapt and adjust. Is that what we're underpricing here, Jim? Is that all of corporate America, as a basic equity stance, will adapt to the cards they're dealt and do better than the gloom that Lisa feels very much so?
I totally concur with that, Tom. I think the pandemic has been a great demonstration of the adaptability of capitalism in this country. If you think back on where we were initially and how we've adapted what companies are doing to make things safer and to be able to operate during a deadly pandemic in a fairly safe fashion in most cases. It isn't really, you don't hear so many cases with companies that are operating as much as you do with youth spreaders at college and so forth.
Yeah.
Companies have adapted that. And not only that, but they're finding new ways. We had food trucks here in Minneapolis that have opened restaurants during the pandemic. While other restaurants are closing, they're opening restaurants. And so I do think that we find new ways. Imagine what this pandemic would have been like 20 years ago had we not had the technology that we have, so 75% of the economy could keep working from home.
Right, John, a serious question. Do you perceive British companies as malleable as Jim Paulson and I perceive American corporations? Do they adapt and adjust to things like Brexit?
They're adjusting. Never mind Brexit. I think a question we need to be asking is the transformational powers of capitalism have been pushed to one side through this pandemic. Perhaps rightly so. When we come out the other side of it, though, Jim, is that something you think will be damaging to this economy? Do you think we'll have lost some dynamism in the American economy, in the European economy, perhaps more so?
I don't think so, Jonathan. I think we're going to come out of this stronger than ever. I think that we've dumped in so much stimulus, and companies are with the opportunity of low rates that they have today, and we look at a lot of borrowings that are taken down, but that's like a big injection of capital that they're going to use. They're sitting on a lot of liquidity, and I think as we get closer to this thing ending, they're going to be going, well, okay, man, we've got to up our staffs. We've got to go ahead and rebuild inventories. We're going to look again at our capital spending programs long term. I think we're going to adapt and be quite dynamic after this pandemic. We're going to find a new way to deal with retail and than we did before. We're going to, I think, find many new solutions after this pandemic.
I hope so, Jim. I really do. Jim Paulson there. Stay well, sir, of Luthold Weed and Capital Management. I can hear Lisa screaming, zombies on the sidelines.
Well, honestly, there was a story on
companies.
Bloomberg. Hold on a second. There was a story on the Bloomberg terminal showing that 20% at this point of large U.S. companies are considered zombies, basically that they cannot cover their interest payments with their current earnings. And that, to me, is shocking. Yes, this is just perhaps a byproduct of the pandemic, but what does that do to long-term growth, John? Why are we keeping these companies alive?
Let me tell you something.
I don't think you
can embrace the transformational powers of capitalism in a pandemic. If you want to embrace creative destruction in a pandemic, I would argue that you're going to end up with a kind of economy that is not going to do well once you have a vaccine. Now, I get it around e-commerce and retail and all those good things, though. Tom, when we come out the other side of this, you still want the restaurant business. You still want the services around the city to be working and effective, and you still want that labor force to be ready to go.
This is why America has the most liberal bankruptcy law in the world. John, we will fold our way out of this like we've done in every other crisis back to the early 19th century.
Coming up on this program, Julie Norman of the University College London, from London and New York this morning. Good morning to you all. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Pfizer and BioNTech are asking U.S. regulators for emergency use authorization for their coronavirus vaccine. If the FDA says okay, the vaccine could be available next month for high-risk populations. Earlier this week, the drug makers reported that a final analysis of clinical trial data showed the shot was 95% effective at preventing the disease. Another legal setback in President Trump's bid to overturn Joe Biden's election victory. Last night, a federal judge denied a request to halt Georgia's certification of its election results. That's supposed to take place today. According to a hand recount completed Wednesday, Biden won Georgia by more than 12,000 votes. Meanwhile, President Trump is now reaching out directly to Michigan lawmakers to try to overturn the state's vote. Bloomberg's learned the president will meet with Republican leaders of the state's legislature today. Some Trump allies have urged him to persuade legislatures in states he's contesting to overrule voters and give him the state's electoral college votes. And one of America's top chocolate makers is appending the New York cocoa market. Bloomberg's learned that Hershey is taking an unusual step. It's directly sourcing a large amount of cocoa through the ICE Futures U.S. exchange instead of buying beans in the physical market. Hershey saved millions in that deal, but it sent December delivery futures to a record premium over the next contract. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
We've been shouting from the rooftops for a very long time. There is a monopoly problem in this country, and in particular, there's a Google problem in this country.
This new law that came down from China's National People's Congress Committee ended up leading to the disqualification of 4 pro-democracy lawmakers.
This is probably the very final and complete crackdown.
I hope you understand it is not anything new at all. This was supposed to happen.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
we explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Hello guys, I'm placing an order to buy euro at 118.635. Okay, order placed and it was executed 118.635. Okay. Okay, position open.
Year end, the Federal Reserve would like to extend them. The Treasury, Secretary Mnuchin would like to use the money elsewhere. From London and New York this morning, good morning. Let's get you some price action. A quiet morning. I have to say, a quiet week in the grand scheme of things. We're unchanged on the S&P coming into Friday. We're down 2 points in the here and now. In the FX market, euro dollar 118.64. Just a little bit of a softer euro here, down 0.1%. And in the bond market, not much to talk about here, Tom. 83 basis points on the session. We are unchanged on the morning.
We at Bloomberg, and this is one of the great tools that John, Lisa, and I use every day, folks, is our headline service. This was invented 30 years ago. It's absolutely definitive. We have in the screens in front of us a global first-order condition headline dump. And the latest headline I have on Michigan and the president is the Michigan Secretary of State. Lawmakers haven't confirmed their meeting with the president today. I'm not really sure what the actual fact is, but that's the latest headline I have, away from expected last evening as well. Julie Norman is at University College of London, and of course she has studied the academic tumult of our political system. Julie, it goes back to 1876. Rutherford B. Hayes, a completely different election. Michael Beschloss was heated last night that there's not a comparison to 1876. What is the comparison you see now as this president speaks to state legislators and to election officials?
Well, Tom, I think it's pretty unprecedented, obviously, in any recent times. And as you noted, pretty far back in history is the latest we've seen anything like this. And this so far is just an invitation. As you said, we haven't heard of a confirmed meeting yet. But the fact that the president is reaching out, putting pressure on state legislators, presumably to have sway over the pick of electors, maybe contrary to the popular vote, would be something just unprecedented, and I think would spark uproar that we have not seen yet. I think the public has pretty much held it together, but that really would be a tipping point.
Julie, we are honored at Bloomberg to have a legal team that's outstanding. Noah Feldman, folks of Harvard, publishing yesterday on another election matter. Julie, do you see that the judiciary system intrudes into this action and process of the president, or are they really removed from this specific discussion?
Right now, I think we see that the judiciary has been pretty removed. We've seen that nearly all of the attempts to push this election into the judiciary system have not gone anywhere. The courts have maintained their integrity and pushed back at most of the lawsuits that had no substantiation behind them. And we obviously don't see anything taking root even at the state level that would push things up to the Supreme Court. So right now, I think we see the judiciary staying pretty independent, and rightly so.
Professor, do you have a deadline in mind when this just stops? Now, politically speaking, they could carry on with these theories for a long, long time. But in your mind, just in terms of approaching January 20th, what's the deadline to actually go through the procedure, the process of taking this through the courts?
Well, I think that we'll see going into December 14th when the electors actually need to cast their ballots. And if those ballots are cast in a way that aligns with the popular votes, I, again, don't see the courts necessarily getting involved in any way. If at that point there's still questions, challenges, lack of decision among the states, that's the point that I think there would be any kind of judiciary intervention. But I think that's quite unlikely at this point. We see Trump doing a lot of what he's doing to delay the process, to cast doubt on the legitimacy, but to actually move it into the courts with any kind of meaningful outcome would still be quite a long shot.
Julie, there's been silence by a lot of Republican leaders, by almost all of them, with a couple of exceptions. And I'm wondering what this means for the Republican domain going forward. I mean, does this mean that there's going to be an adherence to a Trumpism well beyond the Trump presidency?
Well, it certainly looks that way, doesn't it? I mean, right now, what we've seen is that the Republican officials who have spoken out against Trump have been mostly those in non-elected positions, and nearly all officials in elected positions seem quite concerned still about not alienating Trump as a person, but more over Trump voters, and recognizing that there's still a lot of support for his messaging among the GOP, and that's just not a risk they're willing to take just yet.
Julie, what are you going to study this weekend? I mean, seriously here, with all this uproar and turmoil, you're the pro here. What are you going to focus on this weekend?
Well, I'll tell you what I'm actually looking at, Tom. A lot of my work takes place overseas and in places like the Middle East and deeply divided societies. And me and some of my colleagues right now are trying to understand what drives divisions in some of those places and what we can apply from those to the United States right now, and also what prevents conflict in those places and might prevent conflict and smooth this transition in the U.S. right now.
Julie, that's quite a comparison. Before we let you go, is that just hyperbole, or do you actually think that's a comparison worth pursuing?
Oh, I definitely wouldn't say the cases are a direct comparison, but more that what we look at in terms of indicators for deepening othering, aversion to other political parties, senses of moral differences, all these are things that over the long term just create societal divisions, and those are trends that we're seeing in the U.S. right now. I definitely do not take an alarmist approach. I don't see the U.S. descending into violence, but I do see these deepening social divisions that are a bit reflective of some other places where I've worked, and I think a lot of people in the U.S. are concerned about that right now.
Do you see that in other Western democracies as well?
We do. I mean, right now, even in the UK, in Europe, there's some of that. I would say the U.S., though, really is at a different point. I think a lot of the populist messaging throughout Europe has embedded that a little bit, but more in the continent than the UK. But the U.S., we do seem to see a different kind of a division between kind of two different kinds of America that are not really that far apart on a lot of issues, but seem to just have these social divisions that are becoming deeper rather than bridged.
A conversation we'd love to continue another time. Julie, thanks for your time today. Julie Norman there, University College of London professor on the divisions in the United States of America that have been evident for a long, long time. But once again, Tom Keene, back to the surface and focused on in a big way.
Yeah, she said that with great humility, and of course she's got to be careful what she says. John, all it comes down to is, are we becoming like, say, Sudan, or, you know, pick 7 other countries that are third world?
Which is ridiculous, and I don't think she's suggesting that.
And that's not what
come on, that's what she's saying.
No, she was saying what lessons can be drawn from that.
Yeah, I agree. I'm the one doing the hyperbole here. I get that. She's being responsible. I'm not. I get it. Lisa doesn't get it. But the point, you know, come on. But the issue here is, you look at the newspapers, the Bloomberg.com, and it's original in America right now. That is a fact.
Torsten Slok's up next. I wonder what he's got to say on that, or rather, what he hasn't got to say on that. Apollo Management Chief Economist in a new seat. The conversation's going to be very similar. Looking forward to having that conversation with him. From London and New York this morning, good morning to you all. This Friday morning, equities declined 0.1%. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters, which is not negligible.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
From London and New York this morning, good morning. This is Bloomberg Surveillance, and here is the price action this Friday morning. I have to say the news flow really impressive. The price action, it's a bit of a snoozer this morning. The S&P 500 down about 0.1%. The Nasdaq just a little bit firmer. The Russell a little bit softer. The division between the two, I know that's where the story's been. We've been talking about it repeatedly over the last week. Over the last month, the Nasdaq up about 8%. You've had double the return on the small caps on the Russell. This morning, the small caps just a little softer, down 0.2%. Switch up the board. I'll finish on the bond market quickly. Small caps, the cyclicals, they've done nicely over the last couple of weeks. The bond market's not come along for the ride. We've talked about that many times this week. I think it's worth repeating. The spread between 2s and 10s, about 67 basis points when we woke up 2 Mondays ago before the vaccine news. That's basically exactly where we are right now. 10s at 83 basis points, 30s at 154. And Tom Keene, you might have had the cyclical move, that rotation into cyclical equities, the banks. You just haven't had the move in the bond market in quite the same way. And I know we keep talking about it, but it's worth repeating. If you want that trade to work, do you need this bond market to come with it?
Need is to have the real yield come with us as we move to one of John's properties here this afternoon. The real yield, the 10-year real yield, negative 0.8750%, and that's a greater negative real yield through the week in a churn. I don't want to make too much of that, but it's worth noting here as we go to Pharaoh's property this afternoon. Here's the way it works. Scott Kleinman and Jim Zeltner at Apollo Management, in a weak moment, took one of the best economists in the street and dragged him over into the dark side of asset management economic analysis. They stole Torsten Slok from Deutsche Bank. Huge loss for Peter Hooper and their team, and we're thrilled that Mr. Slok could join us this morning. Torsten, a global Wall Street question. How's it different being an economist for a massive global bank versus being an economist for asset managers?
Well, the data and the analysis is really literally identical. I mean, trying to think about what markets are doing and where they're going, the analysis ends up being exactly 100% the same. So in that sense, the job that we all have of trying to think about where is the economy going and where are financial markets going is the same for all of us.
You're at a cross section at a very interesting time, though. We have Dallas Fed President Robert Kaplan coming out saying that he could expect a contraction even in Q4 as a result of the worsening pandemic. And then you have Jim Paulson of Luthold, who just came on and says that he expects a 5% expansion in Q4, this sort of bullish bullish attitude in markets versus the bearishness of economists. Where do you come out in this divide that seems to be growing?
Yeah, what is very important to watch is the high frequency data, and jobless claims yesterday, as you also talked about, of course, was going up. That means that more people are becoming unemployed. This is a yellow light for risky assets. I mean, there's something here that's going on in the economic data where the nightmare scenario for markets would be if the unemployment rate in November will begin to go higher. I mean, we are still waiting for the vaccine. There is still some time before the vaccine comes. We have now more conversations about whether we need a second generation of a vaccine. There's a lot of still question marks around how the vaccine will be both deployed and how it will function, etc. But the short answer to your question, Lisa, is that in the short term, it's very different from as a forecaster the way it normally is. Normally, you have a lot of certainty about the short term and not much certainty about the long term. But here it's the complete opposite. We have a much better idea about what things will look like in 2021 than what we have in the next 2 months.
Torsten, I really underestimated the resilience of the US economy and how quickly it would bounce back, and many other people did as well. Are we repeating that again as we work our way through winter?
So it is the case that the U.S. economy is more resilient than any other economy in the world. We have much more dynamic labor markets, product markets. We have more competition across all markets than literally any other country in the world. So in that sense, the dynamism of the U.S. economy is not being impacted, at least not dramatically at the moment. That being said, the cyclical movements around that structural issue continue to be a risk here in the short term. And that's why some of the high frequency indicators, both of mobility, have started to go down. Also open table, restaurant bookings have also started to go down. We have some rollovers, even New York City transit MTA data has also started to show some more weakness in the last few weeks. So we're a little bit worried about where the high frequency data is taking us at the moment.
Well, let's talk about the policy composition, the policy prescription. Often on programs like this, you talk about speed and size. We talked about that with Jared Bernstein earlier this morning. Let's talk about composition, where you would target the stimulus right now, Torsten. Where does it need to go?
I think it is highly unusual, as you also just spoke about a little while ago, it's highly unusual that you have the Federal Reserve and the central bank asking fiscal policy for aggressive action. I mean, as you all know, I used to work at the IMF, and there the main lesson is that the central bank should be telling politicians to spend less money. Now you both have in Europe and in the US, the central bankers almost asking and pleading politicians to spend more money. Please increase government expenditures. Please cut taxes. That is just a really... And that's why the need for fiscal expansion and the call from that from the Federal Reserve is so significant.
Torsten, to your claim charts, what has moved is service sector inflation has become service sector disinflation. What are you advising Apollo management? Does it sustain here? Does it become more disinflationary? Or do we just assume a reversion to that 3% level on the great service sector question?
Yeah, this is a really important point, Tom, because the shock to the economy with this pandemic came to the service sector. It was restaurants, it was retail, and therefore we saw significant declines in prices and significant declines in employment in the service sector. That's now rebounding, so that's why we're seeing a reversal of that. But historically, over the last 20 years, remember, if you separate CPI into goods inflation, has basically been zero for the last 20 years. All the inflation that we have seen and most of the variation in inflation has come from the service sector. That's why the unusual situation here with the service sector being a driver of inflation, first to the downside, now to the upside, is something that is very important for the inflation outlook overall, that we have had this compositional shift where the service sector suddenly is playing a more cyclical role relative to the goods sector.
So are you framing the American economy as a return to previous trend, or are we establishing a new level of trend that will be a lesser level?
So in trillions of dollars, we're still 1.3 trillion in, at least in Q3, in terms of how far away we are from getting back to the trend that we had pre-pandemic.
Yeah.
If you want to fill up completely the hole that has been created in the last 2 or 3 quarters, then we need something more like 4 trillion. This gives you some idea about what is the magnitude of fiscal need, if you will. And the question exactly is, as you're asking, well, do we want to get just back up to the trend line, or do we want to fill up the hole completely? In other words, how quickly do we want to get the unemployment rate to come back to the 3.5% that we had in February? So in that sense, all this will depend, of course, on the speed of when the vaccine will come back. But it also will depend on this issue that we also are talking about all the time, if we will get another fiscal stimulus or not here, either before the end of this year or sometime in the beginning of the new year.
Of course, as as we try to plug this hole by borrowing money, there is a question of that overhang of debt, the unbelievable expansion of debt globally over the past 9 months in order to plug this hole, what that will do to growth going forward. And I'm just thinking about our conversation about zombie companies not that long ago. 20% of the large U.S. companies considered zombies. What does that do to long-term growth in the United States? Do you think it's adequately priced in?
So the BIS has done a lot of work on this, and what they have repeatedly said now for several years actually is that if we have a bigger share of companies that ultimately are more unproductive and are using resources, using capex, using workers, then you do run the risk that that begins to have some macroeconomic implications. And on top of that comes also the other issue to your question, Lisa, that if you do have such a significant increase in the amount of U.S. treasuries outstanding, what should you then be watching? You should be watching for risks of potentially talking about downgrades to the sovereign of the U.S. Fitch already has U.S. sovereign on negative watch. You should also be looking at treasury auctions for what is the bid to cover ratio doing. You should also be looking more broadly for demand and supply in the treasury market. So far, everything is fine, but it's pretty clear that when you think about the very significant actions from the Federal Reserve, there is some very important questions about demand and supply in treasuries that we all need to think about also over the coming months.
Torsten, what are you optimistic about next year?
So I am optimistic about the vaccine, and I do think it will work. But this very unusual situation where there's more clarity about 2021 than there is about the rest of 2020, that is really making it very difficult when you sit with your spreadsheet and try to put together your forecast for the global economy. It does make it quite complicated to think about, well, will markets trade on the bad news in the near term and the downside risks, or will markets look through that and just focus on the vaccine next year? That's why there is still a risk that things could be still a bit bumpy in the next few months before we have the final answer on the vaccine, whether this is something that will help everyone and really will be as helpful as we're all hoping at the moment.
Torsten, wonderful to catch up and great to see you in a new seat. Fantastic. Torsten Slok there, now of Apollo Management. Thank you. We are hearing a little bit more from the Federal Reserve. This is from the Chicago Fed President, Mr. Evans, speaking over on CNBC in the last couple of minutes. He said the emergency facilities have been very helpful. He calls the Treasury decision on those Fed programs, quote, Tom, disappointing. Yeah. That tension just starting to build as the day progresses.
You wonder here, and again, Mr. Mnuchin, I think, scheduled to be on the Death Star as well. Maybe we'll see that coming up this morning. And, John, we'll just see where we are come into Friday and into the weekend as well. It's a movable feast. I should point out the president has tweeted at least 8 times this morning. It is about the themes that he is focused on right now. Nothing, John, to really state about it, but nevertheless, we can state that the president has greeted that beautiful day in Washington.
There is an uncomfortable calm in this market, I've got to say. We're down 6 points on the S&P 500, negative about 0.2%. Not much movement. Lisa, if I told you yesterday, when we were talking about high yield and a price-insensitive buyer standing there on the sidelines, disrupting this market and keeping it insulated, if I told you this would play out in the next 24 hours, where do you expect that market to be? I would expect there to be more of a disruption. That said, there is a question of, first of all, whether this could get expanded next year, right? So Joe Biden coming in could potentially increase this program for the Federal Reserve, reinstating it in a way and giving it ammunition. So it's not off the table. But there also is a question of how useful it actually was. And here's the thing, John. I think there's a real conversation about whether the Fed should be involved in credit markets at all. But the idea that it can be stripped from them, this ability to do so without discussion and at dissonance with 2 heads of major agencies, that's what I would think would be a little alarming to markets. Lisa complained when they stepped in, Tom, complaining about
no, but that was what I'm saying. Away. I think there's a debate, and I think it's fine. I hear you. Carry on. I know which side of the debate you're on. We all do. It's okay. Alongside Tom Keene and Lisa Bravitz, I'm stepping away.
You're stepping away? I've just been doing my fleets out on Twitter. I'm just doing fleets.
How's that going?
Oh, it's just great. I mean, I'm on the edge of it. I'm on Instagram. I'm like Instagram husband on Twitter.
Instagram on Twitter.
What's going on?
Yeah, fleets.
Up next, James Athey of Aberdeen Standard Investments.
Fleets.
This is Bloomberg.
With the First Word News, I'm Rishika Gupta. If the FDA gives the green light, that coronavirus vaccine from Pfizer and BioNTech could be used in the U.S. next month on high-risk populations. The drug makers say they will file today for an emergency use authorization. Earlier this week, they said a final analysis of clinical trial data showed the shot was 95% effective at preventing the disease. The Trump campaign lost another one. Last night, a federal judge refused to block Georgia from certifying its election results. A hand recount showed that Joe Biden won in Georgia by more than 12,000 votes. Earlier in the day, a judge in Arizona threw out a suit seeking an audit of the vote in a pivotal county. And the Trump campaign pulled the plug on its own suit in Michigan, falsely claiming it had stopped the state's vote certification. There's rest split between the top two U.S. economic policymakers. Treasury Secretary Steven Mnuchin called on Fed Chairman Jerome Powell to return money for several Fed lending programs that rely on Treasury's backings. Minutes later, the Fed put out its own message. It urged that all of the lending facilities be kept in place. Mnuchin told Bloomberg that companies don't need more loans, they need grant money, which must come from Congress. And Congress is getting closer to that $1.5 trillion spending bill that would avert a government shutdown next month. Aides to House Speaker Nancy Pelosi and Senate Majority Leader Mitch McConnell met to hash out the details. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
It came in better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
I do think
European governments have to continue to support people and businesses. This is a health crisis. It's government's responsibility. We cannot just rely on monetary policy. Withdrawing support now, I said it the other day, would be like closing your checkbook during a war.
Anna Botín there, Santander chairman, speaking of Bloomberg a little bit earlier. A little bit later, we'll be catching up with Morgan Stanley chief economist Chetan Nair. That comes up on the Open in about 13 minutes' time. Trust the recovery, keep the faith. That's the story coming out of Morgan Stanley, Tom.
Yeah, it'll be interesting to see. And, of course, after Ellen Zentner's winter of our discontent comments earlier this morning, this will be an important conversation on one of Mr. Farrow's many properties. We welcome all of you on Bloomberg Television and Bloomberg Radio to a narrow conversation. What we do often is we take a wonderful guest who usually talks bigger and broader, and we note that they say one single thing, and we go narrow. We do that right now with James Athey of Aberdeen Standard Investments, looking at broader investments. But right now, James, in your important comments the other day on China and the idea of China with negative interest rates, is China becoming Europe-like?
Hi, yeah, good morning, Tom. I guess you're referring to the Chinese Euro bond issue, which obviously came with a negative yield. I mean, it gets a bit kind of technical and complicated and confusing for non-bond investors or non-geeks or what have you. But obviously what you're buying there is first and foremost European interest rate risk with some Chinese credit risk thrown onto the top. So while it may feel like from a logical perspective, you should be able to equate a kind of currency, euro currency hedged CGB with a euro denominated Chinese Eurobond issue. What we've seen in emerging markets more broadly and what we see here is that that's not necessarily the case, because obviously the interest rate outlook in Europe is vastly different to that in China.
Now, James, you never have to apologize for geekness here in the bond market. I'm bad and Lisa's even worse, so it's okay.
Guilty.
You're guilty.
I'm in a safe space.
But James, folks, this is really, really important. China's not Italy. China's not the U.S. And yet, James, China goes shopping in Europe to do debt in a euro denomination. And am I right that selected maturities had a negative interest rate? That's the price up. That's the massive demand, isn't it?
Yeah, so exactly. If you're a European investor, your home currency is euros, then you can't escape the fact that you face a negative interest rate environment. You can buy all sorts of issues from around the world, but if you do so on an unhedged basis, you're taking currency risk, and so it's not a fair comparison. Once you start to hedge away those currency risks, covered interest parity says that you will end up back with your negative rate outlook. So if somebody from a faraway land chooses to issue in the European bond market and you see them as a credit-worthy issuer, and they come somewhere which is attractive relative to euro-based credit-worthy issuers, then that's something that you will look to invest in, just as a kind of logical extension of your of your home interest rate environment.
James, one reason why I was really excited when I saw that we were going to speak with you today is you've had a very realistic outlook on credit worthiness at a time of uncertainty economically for corporations globally. I'm wondering your response to this morning's news about this growing rift between the Treasury Department and the Federal Reserve over this extra money that went toward buying corporate bonds and municipal bonds. And it raises a question, and the key question in my mind, how much of a backstop have these Fed programs been to credit, prompting the low yields that we see today?
Hi, Lisa. Yeah, thanks for using the word realistic rather than something more pejorative, possibly miserable might have been more appropriate.
No, she does that Monday through Wednesday. Early in the week, James, is when she goes pejorative.
I see. I've caught her on a good day then. So when I studied economics was the study of the efficient allocation of scarce resources. Well, I'd like to believe that, money is still a scarce resource ultimately, and so governments must choose where to put their resources. And to me, it seems that there was a lot of money backing those programs which had thus far gone unused, and there is still a lot of economic need within the US economy rather than within US financial markets. And so to make that choice to say, hey, look, there's nearly $600 billion there that maybe we could deploy in the domestic economy without going through a lot of political rigmarole, that might be a more appropriate, a more desirable, a more efficient allocation of those resources. So I think that's a perfectly reasonable thing. If we get into some sticky situations further down the line, of course, Treasury can choose to appropriate create funds to back those programs again. That's, this doesn't preclude that occurring. How much have those programs backstopped markets to this point? Well, I'd say they've been incredibly effective. Nobody wants to fight the Fed. Actually, that "don't fight the Fed" has become to blindly follow the Fed for many investors. So I think they have been very effective, mainly through the sentiment channel, not necessarily through mechanics or liquidity provision.
James Athey, thank you for being with us, particularly those comments on negative interest rate issued of euro paper by China. He's with Aberdeen Standard. Lisa, I must admit, it is an extraordinary Friday. And if we didn't have all the Washington stuff going on in election 2020, it'd still be extraordinary. It's not just about the politics, is it?
No, and it's really the cross currents, as John said, really stunning, and it's amazing.
I can't believe he got that line in and I didn't. Continue.
You could say it. Do you see some cross currents here, Tom? Look at that. Tom Keene said some cross currents. Look, honestly, I think, though, that you do have the economic reality, you have the political noise, and then, it's really interesting to me that on the election front, we're getting Georgia actually coming out. The election will be certified with Joe Biden being the winner of that state at 10 a.m. We are hearing that being reported currently by CNN. Markets have already moved on. I find this really interesting, Tom. Washington, D.C., the Beltway has not. But you know what? Markets are moving on, and they're looking to policy, and they're looking to the end of the pandemic next year.
Yeah, it's interesting to see. And, I think, Lisa, that it's fascinating. And, you see for things, folks, something obscure like what James Athey's talking about a negative interest rate issued out by China. That's one of those cross currents that, we speak about as well. I mean, I think of cross currents, and really the way we cross current forward here in the shop is it's all Faro all the time from 9 o'clock on with the cross currents of the open and the real yield. John, what do you have at 9 o'clock?
I'm just sorting out my microphone. I've got Chetanaya of Morgan Stanley.
Who else? Come on.
Look forward to that conversation. We will also have Evan Brown of UBS, and one of their conviction calls is a weaker dollar through 21. I think we've got to talk about that, Tom, whether that weaker dollar actually materializes. I understand that if we get synchronized global growth, if you get behind that idea, risk appetite builds, I can get behind the idea of a weaker dollar with you. And I think the vaccine news of this morning is a little bit more fuel for the idea. That's the trade to get behind in 21.
John, I wasn't being serious about that. Tottenham, Manchester City, what do you think? I mean, we get back to real football.
I think City's in a bit of trouble if they don't beat your Tots tomorrow.
The Tots are on fire, but do the Tots have a defense? I don't see the defense. Is it really evident there? Where's the Virgil,
I love how educated you've become on this. They don't have the Van Dijk type of player in the back four for the Tots, but they have a great strike force.
What
I can't
about
believe
Arsenal?
I'm even calling them the Tots.
Well, that's
Lisa knows more about Arsenal than anyone.
The Gunners. I'm sitting here. I'm trying to. I'm looking at my screen. I'm looking at markets, I've got to say. But carry on with the Premier League.
You look at your screen?
Yes.
Shall I tease my show
on
and
radio,
tease us out?
folks, on radio, we have a breaking news banner that's in red for Arsenal. That's how much we accommodate Lisa. John, have a great day. Seriously, folks, John Farrow on the Real Yield this afternoon. It'll be a must-watch. David Weston at 12 noon, an important conversation on the markets. This is Bloomberg. Good morning.
I'm placing a stop on profit for euro at 118.655. Okay.
once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points to continue in this knee-jerk risk-off feel.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the open starts right now. With 30 minutes away from the opening bell, we're down about 0.2%. We begin with the big issue. A new stimulus dispute brewing on Capitol Hill. Treasury Secretary Steve Mnuchin and Fed Chair Jay Powell clashing over the fate of some of the Fed's emergency support program. The Treasury Secretary preparing to let several of those facilities expire, requesting Chair Powell return the remaining unused funds, telling Bloomberg in an interview the following: the economy has responded very strongly, but there are still areas of the economy that need more support. That's why I'm encouraging Congress to reallocate this money. The Fed quickly responding in a short statement saying the following, quote, "We prefer that the full suite of emergency facilities established during the pandemic continue to serve as a backdrop for our still strained and vulnerable economy. All this coming amid surging infections and increasing restrictions on economic activity." Dallas Fed President Robert Kaplan voicing concerns about the recovery.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough so that local officials, even though they don't want to do more restrictions, they don't have a choice. So the next couple of quarters is going to be very challenging.
On this story, an important story, I want to bring in Bloomberg's Michael McKee, our international economics and policy correspondent. We have a bit of division at a time when we don't want division, Mike.
Yeah, well, what's really interesting, John, is that the markets are just kind of caught between the present and the future. The market that we saw bond yields fall right after this news came out, and we're down all night. But now on the Pfizer news this morning, they're back to sort of unchanged on the day as they bet maybe this will blow over. But for right now, it is a split between the two sides. After the markets closed, the Treasury Secretary sending that letter saying that he wants to close down a number of the programs, 5 of the lending programs that were put in place in March to keep the economy and the markets going. And then he would keep 4 of those programs, including the commercial paper funding facility and the money market facility, open, but just for 90 days. He's asking for the money back, as you mentioned, that hasn't been spent, which is about $260 billion of the $454 billion Congress originally put forth for them to use. We don't have any indication the Fed that it is going to give back the money at this point. Mnuchin's argument is that the programs have worked. We saw a big spike in spreads in March in all the bonds that were being sold around the United States, including particularly the high yield area, and those spreads have now come down. So the Treasury doesn't need to have the Fed doing this anymore. But the Fed argues that we could still see this reverse if the markets lose confidence or if this latest COVID outbreak causes problems. And so they sent their response without saying exactly what they're going to do about it. $195 billion already earmarked for the Fed. They still have that money. Some of it's out. They could use that, and they could come back if they needed to by using the Exchange Stabilization Fund at the Fed. That's a sort of pot of money the Treasury Secretary controls, about $74 billion in there, but it still leaves hundreds of billions that would have been available had Mnuchin extended this. And of course, the question is, why are they doing this now? Some saying that the Trump administration just wants to make it more difficult for the incoming Biden administration.
Mike, this just feels very clumsy, and typically Secretary Mnuchin has been very apolitical. He's tried to help the economy, he's worked very well with the Democrats, and he's making the argument that he wants to repurpose those funds. What is surprising to me is that they haven't got ahead of this and got on the same page ahead of time. As far as the money being returned is concerned, is that something that would have to take place now in the next week or year end?
Year end is when these programs are supposed to expire, and I guess in theory the Fed can still make more loans, although there hasn't been a lot of uptake. There has been some additional Main Street lending over the last couple of weeks. Now, can they reuse the money, repurpose it? Probably not, because Congress has to appropriate the money. They appropriated it for this particular program, and if the administration wants to use it for something else, they would have to get congressional permission. Although this administration has not been big on getting permission before it does things.
Michael McKee, great to catch up, sir. Thank you. The good news this morning from the Federal Reserve's perspective is that we haven't had an adverse reaction in this market yet. Credit so far, a little softer if you're looking at CDS, but overwhelmingly, we haven't seen the story that I think many people would have expected on the story that has occurred in the last 24 hours. In equity markets, futures are down, what, 0.4% of small caps, unchanged on the NASDAQ, and down 0.2 on the S&P 500. UBS's Evan Brown doubling down on a dovish Fed, writing the following: we still don't think the market has fully grasped just how structurally dovish the Fed now is and its willingness to remain accommodative and ease further, even as the recovery continues. Of the typical reflation trades, we have least confidence in a large rise in bond yields or steepening in the yield curve. Evan joins us now for more. Evan, let's just start with this spat, if we can call it that, between Chair Powell and Secretary Mnuchin. Your first take?
First take is it's suboptimal. I mean, when we look back to March and we think about what got us to today with the economy not in a great depression, financial markets not in absolute crisis, it was the coordination of the Fed and Treasury working towards a common goal that was so powerful. To see them now not on the same page is not a good signal to the market. And so I think it's not a great message. I think that the tail risks have risen somewhat in corporate credit, such that, you know, if things really do go wrong, worse than we expect over the next few weeks with the virus and the economy, that that lack of a backstop there, or at least knowing we're going to have this gap between the end of this year and into a Biden administration, it's suboptimal. Is it the end of the world? I don't think so. I mean, as Michael mentioned, we've got potentially with the new administration coming in, you can revive some of these facilities, perhaps with not as much firepower, but that 3-week period and not having both sides on the same page, it's not great optics.
Evan, I think what you're saying is important, though, and I want to sort of caution complacency on a morning like this morning. Just because the market hasn't reacted yet doesn't mean the market won't react. And Evan, your point, essentially, as I hear it, is that removing the backstop isn't sufficient to see the market gap. It's about...
I am moving my stop on profit to 118.685. Okay. Stop on profit move for euro against United States dollar to 118.685.
The expected rebound next year. Well, what if we have an even sharper than expected worsening of the virus and the economy, and we have to get into even stricter restrictions than we're expecting. Those are real risks, and that is when this market and this lack of a backstop or a weakened backstop will be tested. So it's increasing tail risk as opposed to a reason to sell all credit right now.
Secretary Mnuchin, speaking on CNBC just a few minutes ago, said he wants to spend the money on small business PPP loans. That market should be comfortable that we have the capacity left. How comfortable are you with the follow the Fed strategy that so many people have lined up behind over the last 6 months?
So, I still think that, the Fed is providing very powerful support. We know that, but to get the economy really in a place where it needs to be to bridge people through the next few months, I think most people would agree that having a little more fiscal support would help, potentially a lot more fiscal support depending on how bad things get. So the Fed has kind of done its job, and it's staying dovish, and we could expect some extension of asset purchases, or at least the weighted average maturity of those in December. Perhaps the Fed will have to do more, or feel they have to do more, given that some of these backstops are being weakened. But yeah, I mean, I think the way we're going to get the extra support and momentum from the economy, it's not from the Fed easing further. It's from us getting fiscal policy where, the near term at least doesn't look great, and looks like we're waiting into January and the new president to get something.
Well, let's get the market calls. You've lost confidence in high yields and a steeper curve. Seen that over the last couple of weeks. That curve has hardly moved 2 Mondays ago from where it was. Same with the 10-year Treasury yield. Where you've got confidence right now, your conviction trade, sustained dollar weakness through 21, Evan. What drives it?
Yeah, so what drives it is the picture on global growth and also relative growth. So the U.S. might have a bit of a soft spot here. We don't think a recession or anything like that, but a bit of a soft spot. When you look around to the rest of the world, what do you see? I mean, you still have pretty solid credit impulse from China. We're seeing today copper at new highs. You still have a solid impulse, fiscal impulse from Europe. You still have coming a new fiscal plan coming out of Japan. And so the relative growth differentials are going to shift a little bit in favor of the rest of the world compared to the U.S., at least over the next few months before we have that normalization in the vaccine. And then I think the other thing is kind of what we discussed on the Fed and the market not fully grasping the Fed's, what has really changed with the change in the Fed's framework. The market keeps trying to price in this hike into 2023. And when the Fed in their own projections has said, we're not going to hike in 2023, as the economy does recover, the Fed is going to say, you know what, we're still digging in because we want to see that inflation overshoot. We're just not going to get that for a while. So it's going to be hard for other central banks to outdove the Fed. And yeah. I think that puts a structural downtrend on the dollar.
I hear you, Evan. I think that's when the reaction function over the Fed and that shift in the reaction function gets powerful. It's when we start to see the recovery through 21, and they just shrug. Evan, great to catch up. So my best to the team, won't you, Evan?
Position closed on Euro at 118.685.
Here's Abigail.
John, small moves on the surface in the pre-market similar to yesterday. Beneath the surface, though, let's take a look at some of the bigger movers, starting off with some of the vaccine-related companies. We have the shares of Moderna and BioNTech both popping higher on the news. The headlines that the EU may approve COVID vaccines, and they may be ready to spend $10 billion on these vaccines. The stock's reacting very well. Foot Locker is higher on a very strong quarter. They put up the same-store sales of up 7% versus an expectation of a small decline. Williams-Sonoma soaring up 8%. Their comps were really soaring, up 24%. They beat earnings by 84% to put up $1.21 in earnings. And the reason I'm bringing this up, it seems to be in contrast with the retail sales. So there seems to be these idiosyncratic pockets of strength in retail. And then, John, one sector that is weighing just a bit on the S&P 500, the banks, it stands out because we do have the yield curve steepening just slightly. Yields are higher, so it may have to do with that spat between Treasury and the Fed, John.
Good point. Coming up on this program, the CDC issuing a Thanksgiving travel advisory with restrictions ramping up across the country. That conversation up next with Nisha Patel of Parametric. From London and New York this morning, good morning. 18 minutes away from the cash open. Futures down 6. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Help is on the way. We need to actually double down on the public health measures as we're waiting for that help to come. We're not talking about locking down. We're talking about intensifying the simple public health measures. If we do that, we'll be able to hold things off until the vaccine comes.
Dr. Anthony Fauci urging Americans remain diligent until vaccines become widely available. The task force briefing reporters for the first time since April after the CDC recommended cancelling Thanksgiving travel plans. This as a number of states impose new restrictions. California ordering a 1-month curfew. Rhode Island strictly limiting gatherings for 2 weeks. And in New York, Mayor Bill de Blasio anticipating even tighter curbs still to come.
It's just a matter of time before indoor dining will close. It's very likely to be in the next week or two.
In the next week or two, it's inevitable. Bloomberg's Sarah Ponzek joins us now for more. These restrictions, Sarah, keep piling up.
They do keep piling up, and it really is just unsettling, a sobering reminder as we head into the holiday season that COVID-19 is very much still here, and cases are not only rising, but they're rising quickly. If we just take a look at average new cases in the U.S., yesterday we saw daily cases of 188,000. That's the second highest daily toll on record. The record came last Friday at 190,000. And in fact, over the last 34 weeks, 21 of those records have come on Fridays. Now, as you see that blue line there, that's your 7-day moving average of daily new cases. It's really just been shooting ever higher. And with that, as we just heard, restrictions are piling up. California imposing a 10 p.m. curfew that will affect 94% of its residents. We just heard from Mayor de Blasio. We already have public schools closed, but the impending closure possibly of indoor dining too. We also have seen Michigan entering a 3-week quote-unquote pause, and the list really goes on. Here what you're looking at are the states that have seen the highest average daily new cases over the last 2 weeks. Illinois, near 12,000 a day. Then you have Texas, California, Michigan and Wisconsin, both near 7,000. Ohio, Florida, Minnesota, all above 6,000 a day. Of course, though, the flip side to this is the positive vaccine news that we have been getting. And this is what markets have decided to focus on. Well, today we have news that Pfizer and BioNTech do plan to file for that emergency use authorization from the FDA as soon as today to hopefully get approval for use of the vaccine as soon as next month. However, if you look at history, the timetable of these approvals from the FDA over the last 5 years, if you look at vaccines that have gone for this type of approval in the fiscal years 2015 to 2019, it's usually taken anywhere between 4 months and a year to get this approval. You see meningitis at the lower end of the spectrum, HPV, shingles, the flu, further out towards the year end of the spectrum. Of course, there's a lot of pressure this time. This is a high priority vaccine. You hope that we will get approval with speed and with accuracy, but certainly the push is on, especially as we see case counts rise against the hope for a vaccine sometime soon, John.
Sarah, great work. Thank you. We'll touch base with you around the opening bell. This But it's comfortable, to borrow that word from Secretary Mnuchin he used about 20 minutes ago. It's comfortable looking through and de-emphasizing the near-term risk. That was something that Jonathan Golub of Credit Suisse said on this program about 24 hours ago. Nisha Patel of Parametric expecting the tug of war between the virus and a vaccine to continue, writing the following: the short-term outlook seems bleak. Any additional vaccine approvals and distribution news may create volatility within a bond market, reluctant on pricing and a lot of positivity. Nisha joins us now for more. Nisha, let's talk about that. In this Treasury market, 2s, 10s, exactly where they were 2 Mondays ago before we got the news. The 10-year yield almost exactly where it was 2 Mondays ago before we got that Pfizer news. Why, Nisha?
Yeah, I mean, look, you can't ignore the fact of, you know, as we just spoke about and have been speaking about, all these additional shutdowns taking place, the increase in the infection rate. I think the reality is setting in that although the vaccine news, it's groundbreaking, it's certainly really great news, it's going to take a lot of time for it to actually then be approved, for it to be a distribution. We are looking at a year's time frame, that you're talking about a full distribution to the entire population of the country and really around the world. And so while that initial reaction in the bond market and first on the Pfizer news was positive, I think the reality of what this negative economic impact is going to be over the next few months is really settling in. And so even if in December this vaccine, Pfizer's application goes through and it is fast-tracked, I don't expect there to be a massive sell-off in treasuries and that being priced in, simply because from now until then, we can certainly expect a lot more significant shutdowns, particularly indoor dining, additional schools. I mean, here in New York City schools are shut down. I do think it's a matter of time before indoor dining across the state is going to be shut down. And so I think that is what the bond market is focused on. And
agrees with you, Nisha.
Yeah. Yes, and so I think the reality is that, look, even from now until then, you have a slew of economic data, right? More retail sales numbers, labor market numbers coming out, payroll, all before the Fed meeting. So all of this data we kind of know is going to be negative. If it's going to be far worse off than we expect, than what even the stock market is expecting, I think you could certainly see a pretty negative reaction, obviously, in the stock market in a rally, and yields possibly even going lower in the Treasury market from here.
Nisha, can you imagine, though, in a post-pandemic world, if we can get there with a vaccine, the Treasury market looking like it looks right now? Maybe that's part of the story, that this is what the Treasury market might look like even after we have the vaccine rollout, even after we move away from the restrictions, that this is the Treasury market now with the Fed not going anywhere for a long, long time and inflation perhaps not coming either.
Exactly. So look, I think in the December meeting, the Fed is really going to emphasize and maybe focus on two things. Really emphasizing that they're going to keep rates at close to zero for an extended period of time, really provide that dovish guidance. And again, in light of the new developments, in light of the weaker data, in light of the shutdowns, and let's be honest, without fiscal stimulus, there's more pressure on the Fed to do something. And so I think they will have to address that. I also anticipate that they may take the additional step, and especially in light of Treasury Secretary Mnuchin's kind of news, you know, what can the Fed do to possibly help ease the monetary policy or ease conditions. They may extend maturities in terms of what they're purchasing. And so if that policy is in place for quite some time, beyond the vaccine, beyond the distribution, beyond kind of a bulk of the population getting vaccinated, I'm not sure you see a massive shift in terms of where the Treasury market is, simply because when you're looking at inflation, it's going to take us, I think, a long time to get there. Now, if we get fiscal stimulus and multiple rounds of significant fiscal stimulus, I think that's a different story. But unfortunately, looking at this divided government that we're going to be kind of working with, that unfortunately is going to just take, I think, a lot more time. And I think the size of the fiscal stimulus, unfortunately, is just not going to be what some of us might have expected.
Nisha, great to catch up. Really appreciate your time this morning. Thank you. Just want to bring you some news very quickly. Republican Senator Rick Scott has tested positive for COVID-19. So that's another one. Republican Senator Rick Scott testing positive for COVID-19. We wish him the best, that's for sure. Coming up on this program, the analyst action you need to know. That'll be next in our morning calls. And later, Katie Kaminsky of Alpha Simplex joins us at the opening bell, weighing in on the rotation debate that has dominated the conversation over the last 2 weeks. From London and New York this morning, good morning. This is Bloomberg.
Können Sie einmal noch ganz kurz zu uns kommen? Ganz kurz.
Davor stellen.
Economy Forum brought together over 600 leaders to discuss the most pressing economic issues facing the world today.
Join us as we recap the important conversations from the week on our new Economy Forum special this weekend on Bloomberg Television.
Five minutes away from the cash open, equities just slightly negative on the S&P. Let's get you some morning calls. Your first one from Wedbush, downgrading Shake Shack to neutral, $77 price target. The analyst saying it's tough to justify a higher valuation following the stock's recent rally. We're down a little more than 1% there. Your second call from the team at Bank of America, upgrading United Rentals to a buy at $275 price target. The analyst expecting vaccine developments to accelerate the rebound in industrial production. Bit more good news this morning on that front. That stock up by about 2% in early trading. And your third and final call, it comes from Stifel, raising its price target on Starbucks up to 108 with a buy rating. The analyst expecting the vaccine to fuel a rapid recovery for stores located in crowded urban areas. That stock negative, though, down about 0.4%. Up next on this program, Katie Kaminsky of Alpha Simplex joins us to weigh in on the great value versus growth debate dividing Wall Street at the moment. The opening bell just around the corner from London and New York. This is Bloomberg.
side to understand the sensitivities of the other.
Former U.S. Secretary of State Henry Kissinger said the incoming Biden administration should move quickly to restore lines of communication with China that frayed during the Trump years, or risk a crisis that could escalate into military conflict.
Unless there is some basis for some cooperative action, the world will slide into a catastrophe comparable to World War I, with a technology that is even more difficult to control than the technology of the period then.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Imagine a tug of war with either side pulling really, really, really aggressively, but ultimately going nowhere. There's a lot of tension in the rope. That's where this market is right now. Not much price action at the headline level, but a lot of tension. The near-term risks weighed up against the forward outlook, which is looking better again this morning. We're down 0.1% on the S&P. We erased the overnight gap lower off the back of the tension between Chairman Powell and Secretary Mnuchin. Switched up the board in the bond market. Talks about talks again down on Capitol Hill. Stimulus plans maybe up 2 basis points on a 10-year to 0.8472%. And in foreign exchange, euro dollar not doing a whole lot, 118.70. Speaking of tension on the EU spending plans. Guy Johnson, no doubt, will be talking about that in about 30 minutes' time. In the commodity market, we pull lower on crude. We were positive earlier. We're down 0.5% to $41 and about 50 cents on WTI. That's the cross-asset story. Let's get you some movers at the open at the market desk. Here's Abigail.
John, well, with the major averages basically flat, let's dive beneath the surface and find some of the bigger movers. And starting out with the healthcare space and virus-related movers, we're taking a look at Pfizer because, of course, the company is seeking FDA emergency authorization for its COVID vaccine today with its partner BioNTech, and Moderna is also higher. And the EU is saying that they may approve some of these vaccines and then spend $10 billion